Yeah, he's a genius. Oh, the ones that he's trying to make.
Later, but you think he'd put more money into like other companies and just back you know there's one called uh ego or something. It's I know some video, but it's a personal like helicopter airplane thing, and the thing looks badass, and go 1,000 miles on a charge, and it's pretty cool. And don't talk about the price though, but they were talking about it's basically one everybody can use, everybody can have. So
You're talking
Yeah,
about those ones that look
like
like a
personal drone.
yeah.
yeah, but this one was let's see if I can look at it real quick here.
David Joseph, let's go. Scope caps. Welcome to the stream. Thank you all for being here. You should see some good movement today with the Fed coming out. Good opportunity. Hopefully, and keep seeing this Bitcoin pump. Give us a little pop lock and drop it here. Earlier this morning, or last night, I mean, and then this morning it's just kind of been following the ES, just slowly gapping up or slowly just grinding up throughout the day. Gapped up, but market another big thing too is I remember we talked about this yesterday, Baba, right? Look at it today. Where we talked about getting pretty low, looks like some decent buying opportunity. I didn't get a piece of it. It would have been nice. TJ, what's up, man? TJ, we're in the Zoom if you want to just jump in the Zoom too. I don't know if you're at work or something. But this is what we talk about, basically Chinese Amazon, and they're kind of bouncing up pretty hard here. Pretty big. Off that low yesterday, they're already up 28% today. I mean, this thing's moving like a fucking crypto, which is kind of crazy. Steve Mills, good morning. Yeah, TJ, I know it's you.
Yeah, whales are still buying like crazy. I think that number 3 guy's still buying like I think it was 8 to 16 million a day or some crazy number.
And my buddy that trades mostly um my buddy that trades mostly stocks was saying, or mostly options, I mean, was saying that a lot of dark pool activity was happening Monday and Tuesday, and so like dark pool basically saying that there's a lot of buying in the market, but they're just hiding it, right? They're using the back doors because in the stock market, like if we look, we just take a peek at like Apple real quick and look at the trade, and just look at these option times and sales. You can see all the different exchanges, right? I mean, this thing's just going wild. It's only on one, but I mean, you can see Best, Nasdaq, NYSE, C2, Amex, Philly, Box, right? So you can see all the different exchanges that trades come through in the stock market. So what these people do is they'll, hide their orders through some of these dark pools to try to not let everyone catch on. Once they catch on, then
I think there's a bunch of countries that are doing that right now. Before they announce, so kick themselves in the.
Oh yeah, I mean, there's definitely a bunch of countries. I know recently Mexico said that they're going to start accepting Bitcoin as a currency.
Yeah,
That's a pretty big deal. Mexico's a pretty sizable country.
yeah.
Um, I know a lot of people here in California I mean, that's basically they have to convert all of their money to send it home to Bitcoin. So they're already on board with that.
Hey, Brad, I
But
got a question for you
Yeah.
on the, you were talking earlier about looking for pullbacks for the longs, and this is kind of where I've been having some problems with. What are you looking for, like triggers in your brain to identify that it's, we're hitting a pullback to go long instead of we're hitting the bottom to crash through? Like, I know you talk about looking for buying, but are you watching it on the order flow? Like, what's kind of your triggers to make that decision?
So there's a couple of factors that'll go into it. Today, especially leaning for those pullbacks because of the gap. Um, but mainly what I'm looking for is these thin volume spots and to see how it acts, right? So we've kind of got a couple of areas above and below. Even up here is a little bit of thin volume. See that D high really got sold off. I really think it's gonna take that D high, but when it comes up to this thin volume, like let's say if it comes up to this thin volume and then you just see a rejection right away, that's gonna tell me that these buyers up here are pretty weak, right? Same thing on that pullback when it came down here, it really just kind of popped right back up. Um, in a little bit. I don't really like to I don't really like to zoom in on the chart too much because if you do, you can really get like hyper focused and then uh, I mean over. So I mean basically when D period did come down right here, it didn't really spend very much time and just kind of zipped out of here. If these sellers, as this comes down, if these sellers are serious, they're going to hold price here. So same thing when we get up here. If the buyers show up, price should come up here and just kind of hold there for a second. And then it might come back down. But if it gives me that signal that it holds here, that's telling me that buyers still want this. And the same idea here. If it comes down here, holds, even if it does pull back, if it holds, that means some people are getting short probably. And then they'll look for that break. If it pops down and rejects, that's really what I'm looking for these longs. Pops down here, rejects right away, and then basically I'm just trying to get filled as close to this thin volume as possible. Um, I'm not really, with the way that I've been trading lately, I'm not really looking for exactness as far as where I'm getting in. So I'm just looking to try to get in as close to this thin volume as possible, above it or even in it if we get another dip, and then my stop would just be probably below this C, and I'd be targeting that high of C. Um, so I mean, most of the trading that I'm doing is looking for reactions, just because the market is so emotional. Um, and then other trades that I will take, what I'm not really looking for as big of moves, right? Or looking for like a quick scalp. If we let's say D period just kind of gates up here, starts to hold, and just starts to kind of hang out right here. Well, I want to get long. I want a nice tight stop, and my target is just going to be right above that. I'll probably leave a runner just in case it keeps running, and then move my stop up as soon as that first target's hit. But those are more just looking to take out those mechanical stops. The thing is that yes, this was a mechanical sell, this was a mechanical buy down here. In this situation, when you're looking to kind of run the stops of mechanical sellers, if a bigger trader comes in, what should happen could really just disappear and it could really take you out. So if you're not having a tight stop on some of those, you could get in right here looking to break. It's holding. All of a sudden, a big seller comes in, and then boom, price is down here. If you don't have that stop to take you out nice and quick, you're gonna be kind of screwed. Um, but I mean, but mainly there's certain certain probabilities, right, that you play. like this E low, right? If we come back down towards this E low, even this E half back, and we don't break it, well, I'll just might try this long from here, and then just put my stop underneath of that E low, and just look for the D high, right? A nice, I mean, what is this, 36? Look up there for 26. Look up there for the 30 with the stop right here at 23. So a 3 to 6, two. That's a 2-to-1 trade right there. No, it's not. Like a 1.5, I guess. But something like that. In reality, you're just looking for that reaction. But I mean, right now with D being an inside bar and also E being an inside bar, on a pullback right here, it wouldn't be, for me, wouldn't be as safe to get in, just because the market really hasn't given us anything since that B session, right? And that B session was a news driven session where that news that actually came out earlier this morning came out again when the market was open and shot the market up. I know that was
Cool,
probably not as helpful
No.
as
No, that makes sense, especially what you're talking about with the breakout to the stop, because that's been part of my problem with it is like if I miss D coming down right there, where do I get in on the pullback if if I want to be able to, idealistically, I'd want to be able to put my stop below C, when D came down, but I'm trying to keep it pretty tight, with a small account right now. So sometimes that stuff I feel like I miss it, but where can I, I see the move going up, but it's like, where do I put the stop? So that did help.
right.
Because like I don't want to be sitting there like all of a sudden widening because I've been burnt too many times by widening the stop, and then it's like, well, that was my that's my stop loss for the day because I widened it out because I got into it too late. So I'm trying to balance that out at the same time. If that makes sense.
Yeah, no, that makes sense. And a lot of that I think is really just, related back to patience. That's probably the biggest thing that I've taken from that Jim Dalton seminar was patience, developing the patience to just wait, because I don't know how many times I've been in a similar situation, Peter, like you're talking about. Like I miss this D move to the low, and I'm looking to capture on this upside, and I end up getting long up here, and then it comes right back down to here, stops me out, and then goes here. When if I would have just waited, I would have had an entry here. My stop would have been nice and tight, and then the better opportunity. Um, so basically, yeah, if I miss that low, then I try to get in like right near the top and just kind of take those. And then what I'll do is I'll leave a runner, and you've got to be quick if you don't have a hotkey to kind of move your stop at least back to break even or to the bid if we're looking to get long. Um, it's kind of tough sometimes, but because sometimes it'll just like pop up and then come right back in. But you can at least have a take profit right above, nice stop, nice and tight, and then if it starts to run, then you're kind of set up. You just move your stop up to break even and let the runner run, and it goes from a play where you were looking for a 2-point move and then turns into a nice play.
Did he ever say patience pays?
Patience, yeah, patience gets you paid. I think that's one of the. Oh, go ahead, sorry.
No, I was gonna say if that makes sense. I've been trying to keep it. I've been, you've seen the stuff, but like trying
Yeah.
to always do that 10 and 6. So sometimes trying to make, where that 6 point stops, lining it up correctly, and it's like you get mentally like, oh, it's just the right move, and then the move's already happened, and then like, well, now I got to put my stop at 10 points because I've slipped out of my 6 point range. So I've been good about being patient, not taking a lot of trades, but sometimes I feel like I'm taking too few during my
Okay.
time because of that.
Well, maybe see if like looking at a 5-minute chart will help you. Like if you can draw some of these levels, like if we look at this 5-minute chart, you can kind of see where these came up to, got resistance, came back tested, held as support. So it gives you a little bit of a little bit more zoomed in look here. The only thing is, like on a day like today when it's just trending up and it's pretty easy to see, perfect, right? This is gonna work great. But on a day where it's kind of back and forth, or you know, maybe later today, if the market starts to tank, you know, you're going to have all of this movement to the up, and you're like, so you're going to be buying here, buying here, buying here, and then miss a whole downside. And that's the reason I try to stay away from from a a smaller time frame chart. Um, so if we turn this to 30, you can get the same information. It's just you're going to have to be more confident in your entries, right? So we can see this is a 30-minute chart, same as our TPO. Mine just doesn't have the Globex on it, but it comes up, gets resistance right here, pulls down, breaks above it, holds it as support, right? The 30-minute, you know, really flush that low a little bit. And let's say you didn't take this one here, especially because that was the open, right? That this was a or this was the opening A, and then B. Here's, whoa, A and B. And then on this C period, it comes down. Well, you know this is support, right? As you're looking at the TPO. And if you need to look at a candlestick chart, look at a candlestick chart. I do. You know what I mean? Like I show you guys on Thinkorswim. It's on candlesticks because it can give me information like this. One second, guys.
Yeah.
My wife's got to go to the dentist. But so basically what it will come down to is the confidence saying, hey, I'm going to buy this and my stop's going to go below the support or something like that. And you're going to be targeting the high. It is tough on a day like today where we just basically just gapped up. But in reality, I mean, that's kind of what we're getting here. It's just on this 30-minute chart, we're not getting these thin spots of volume. I know everyone's kind of attracted to the big spots of volume, but for me, I'm looking at the thin spots most of the time. And I mean, you could put them on a bar chart easily. But also, one thing that this thing doesn't represent, or doesn't, I guess just doesn't express right away, is where value is at, right? And the key, it's just a key factor. Like I said, today is kind of different because it's pretty obvious that the move is to the upside here. So like right here, let's see if we break this low, and we're looking for this area to act as support, right? And what do we say? We said 20 to 15 was the area that we wanted to see act as support. 15 was that breakout area earlier during B period where we got above and this thing just kind of rocketed up. Do you have any other bar charts up, Peter?
I have it in the background. I'll keep I'll keep trading view up. What I'm mostly looking at is since I'm doing on the micros, you know, I have a micro TPO split. I'll have the mini next to it so I can see the profile and the volume, and then a DOM.
Okay, yeah.
Pretty simple. And then I'm putting up the tick chart now too, because I've been trading a little bit more with the market open because of the time change.
If you guys are all getting up when the market opens, I can just start the Zoom then, and we can just kind of. It's just I won't be as active until I get back from dropping off the kids, but you know, I'm up and watching for the most part, pretty much every single day. Yesterday I kind of lagged, but
yeah, I don't know what everybody else is, but I'm getting on at 11 o'clock Eastern. I'm in Central right now, so 10 Central.
oh, okay.
You know, letting the market simmer down and trying to get a good 2 hours in before lunch. You know?
Yeah, that's a good idea. And look at the tick today too. Pretty much all the distribution, if you look at it, right here's the zero line. You've got, you know, these two little bodies below it, but all of the actual movement has been above the zero line, and we're starting to get close to it. You can see, you know, you can see at least in the tick, the support and the divergence. Where I mean, we're seeing a pretty big divergence here between the NYSE and the weighted sectors here. And you can see because the sectors that have been doing really well are getting beat up pretty bad, but those sectors don't carry much weight. All right, you can see where the red is at. This healthcare sector was only going up because of the new COVID scare, right? It's kind of, but we'll see how it goes forward if this thing gains any traction. But you can see how green for the most part, most of the market is. And I mean, it is, yeah, it's kind of like a 50-50 going up versus going down, but most of these are just not weighted sectors. Look, Walmart turned around. Walmart popped up early this morning. Actually one of the ones started to sell it back down. Yeah, nice spike early on. Now starting to come back down. We've got some levels on Walmart. There's certain things, guys, that I'll invest in that the reason I'm investing in them is because I don't think they're ever going to go anywhere. You know what I mean? Like Walmart, I just don't see it going anywhere. And especially now that they've evolved from what they originally were, where they used to just be like clothes and just, stuff. Now they're a grocery store and like a super grocery store. So they've got everything. And then they even have those little pop-up grocery stores. It's kind of like the episode of South Park that take over. And when you get that opportunity to take advantage of some of these dips, even if like Amazon, right? I think Amazon is a good buy before the split, even if it were to have keep going down. I think I said last week that Amazon's going to do that split, and it's probably a decent idea. It might have been on this day they gapped up, and then they pushed back down. They're back up to basically even, but it's just a decent opportunity to start putting some money into your long term. Right, these are going to split. You're going to have 20 shares. The value of the 20 shares is still going to be the $3,000, right? Because they're going to split. It's not like you get 20 shares all worth 3,000. That'd be awesome. But it's just a decent opportunity to get into a name that I think isn't really going to go anywhere. Amazon, because of how smart, it's a tough word to use it with Jeff Bezos, but how smart he is, because he really is just a freak genius. Morning, Patrick. I think even if a consumer demand happens, like let's say a recession starts to come about, he's gonna figure out a way to still, have Amazon be Amazon. Right? If he has to build fucking hard stores, he will. He'll turn all of his warehouses into grocery stores. I mean, that's just the type of person that he is. He's just the killer. Right? That's just a freak. So. We're seeing oil catch a little bit of a bid here too. Back over quick. The oil initially was pushing down, but didn't break that previous day low, and is now back up at 96, up about a little bit, like almost a 0.25% for the day. Still under 100 though, which is good. What was that 30-day Fed funds rate thing? My buddy said all this buying is happening on shitter net volume. That's what he called it. He's trading the SPY today. So let's see if E's going to clean up this, this kind of triple mechanical poor low here, or if we're just going to keep getting inside bars. Still have 15 minutes until the next session. Three hours, 13 minutes, and 53 seconds until the FOMC meeting. There's a countdown on the CME website. On the oh, here it is. Okay. So the current, which is today, there's a 93 or 96% chance of 25 to 50 basis points. Right? So there could this today still could be a surprise, especially with the market being up, some war talks. Oh yeah, that's probably a decent idea, Alex, honestly. I'm definitely gonna work out while we're on stream, so I gotta be but there's a 3% chance that we get a 50 to 75, right? So everyone's leaning towards this 25, current rate 0 to 25. Everyone's leaning for a 25, right? That's basically what he's guaranteed, but he could surprise today. One thing to look at also, if we can historical, how far back can we? That's not very historical. This is just telling you the percentage right here during February. Market got all scared that we were going to be raising 75 basis points. That kind of fell off. The way to look at it. So here's the dot plot here, and you can see, when this thing comes out today too, it'll be see where they're looking to put rates at. This is basically saying the percentage of rates, right? They expect by 2024 rates to be around 3%. 2020, the longer run to average around 3%. There's a fuck it, we'll just look at the actual chart. I know when. So the last time we raised rates, we're just going to look at the SPX because contract rollover on we're on trading view. But so the last time that we raised rates was 2008. 2018, here. So Al decided, and look, this is January, just gets dumped on, right? Prices it in, accepts it, and then starts to raise, then dumped again. So this is something to take into consideration because it looks very similar to this year so far. We had a kind of a push down in February. Maybe we get a rally. We're kind of getting a rally middle of March. What's today? The 16th. I gotta text my sister. It's her birthday. I'll call it later. And then push down after the actual FOMC meeting, right? So a surprise. This is when Powell first kind of left his stamp and decided the type of Fed he wanted to be. And Powell really is looking out for the economy. People just call him hawkish or bearish, but he really does. It seems like he really is trying um, to keep the market strong, right? So he raises rates, market starts to price it in. I'm not sure what happened at the end of the year, but I do know and this is a Powell hike, after initially pulling some downside, there was some upside acceptance. The gaps you're seeing is because the SPX is only trading on cash session. But I mean, you can see the difference here. If we were to just, I love the
Brad, are you trading March or June contract?
the June contract.
June. Cool. Thanks.
So you can kind of see, and this is 2018, we're not really paying attention to the bar size. You can kind of see how this reaction here, it looked like we were starting to price in. The last FOMC event was that January 24th when it started to push down. And these aren't really, they don't need to be like kind of something to compare to, right? Then you saw that rally, and then on the 14th or the 24th of Feb, this down push really seems more like, well, the fear of higher basis points, and then all of a sudden the Russia news started happening. This is the Russia invasion. We pop up, but the fear of that Russia invasion still hasn't broken down yet, right? So there is some fear in the market, but I think most of it is towards the Fed and kind of trying to predict what he's going to be doing next. And if you see, like previous, he talked about raising rates, actually raised rates, market started to chill out for the rest of the year. Pretty much started to slowly trail up till the end of the year. And this is just saying September, but this is actually October that year. Started to trail off in the end of the year. Look and see what happened. I just need to get like a was September, yeah. September 2008. So this thing says that CNBC says stocks fall on the first trading day of September amid increasing trade tensions with Canada and China. So we had raising rates and increasing supply issues. That can definitely cause the market to go down. We've seen that before. So that's what it was. It was U.S. China tariffs. was that whole battle when Trump was trying to stick that measuring got into.
Only nobody wanted to tell him that we actually pay those tariffs.
So that E period wasn't able to break the low, and now you're seeing some decent volume just fill in this whole center area. And if we're looking at the zoom out a little bit on the ES, you can see where we're filling this in, right? We're kind of filling in this gap below, right? Filling in from where the gap was at, building value above, and then, you know, depending upon what comes out, there's some opportunity. Huge fan of us getting accepted inside this day's value area. So I'd like us to stay above that 14 level. Keep building value above that 14 level. We're going to continue. Yeah, today might be, you know, I mean, we're seeing it right now, you know, super mechanical, 3 inside bars in a row. Until, you know, until Powell starts to decide what he's going to do with the market. Well, the oil report was today. To trade oil today. Oil's starting to get some gas here, almost up. You know, last time we looked at it, it was up almost 0.25%, and now it's up almost 0.75%. So, just as I say that, it drops about 0.25%. So here it is. I finally. So remember we looked at this a while back. So here's the 30-day Fed funds rate, right? And you can see they're pretty much all down until we start to get, you know, out into 2030, which would make sense if PLT, which is a 30-year or 20-year, was going up, right? Because if short-term rates are going down, then long-term rates should be going up, but these long-term rates aren't doing shit. So there's a divergence here in the bond market, and I think I really do think that that's going to be some of these big plays. I mean, commodities obviously have been pretty big, but there's a big divergence leading into this, and that's why I think you know, 5% is not out of the realm of possibility. Just like if you read the trade view last night, the 2% move to the upside, which is what the VIX is pricing in, took us right to this gap, right? Luckily, I mean, you know, I should have just fucking bought the market last night and just closed my eyes and waited till today, but you know, it just made sense, right, as where it was at. And then I started thinking about, okay, well, where's 2%? 2% took us right to this gap. And for me, I'm like, these sneaky motherfuckers they're trying to get everyone all bearish leading into this, and then boom, 2 up days in a row. But they didn't fool us, so that's good. But you figure the bond market has, I mean, there's just so much money in that bond market, and if all these people are still short long-term bonds, they're basically saying that they don't have a great outlook within, you know, a longer term for the US, right? Decent though that TLT is diverging from the market right now. That's actually a good sign, because it used to be a diverging factor and then it kind of went away. So, but you would think if the market's going to go up, then the Fed funds rate, the short-term Fed funds rate, should be going up as well, and it's not. Volume starting to decrease here. We can see we had a little bit of an increase in that 11:30 period, but here at this 12 period, down about 2-3% here. Still getting a lot of calls coming in. Hey, you're getting a lot of calls, but most of them are being traded at the bid. So most of these calls that are getting purchased are passive. There's some decent sized put orders coming through here. $43.20 puts for 8,500 bucks. $43.90 calls for 13K. I mean, that's a pretty big order here. Guy just bought 11 here, 43.50 calls, and then bought 43.90 calls for 15K here. He bought 11 for 13K a piece here. He bought 12. He or she, I'm just saying. Pretty big order. The delta is like almost a half. It is a half on one of the orders. So, and those are the kind of orders. If we look at this chain here, so this is a May. These are both May 43.50 calls, and look, you see him hedging here. Short-term puts. But if you look at this option chain, we'll go to the May, where he's buying these at. 43.50. You know, so he's spending some pretty decent money expecting the market to just go up. Not very much, right? 43.90 calls. These are the calls that he purchased. You look at the volume, those are all him. Here's the 43.50 calls, all him. So I feel like that's a lot of weight to put just in case. Boeing's starting to pick up a little bit. Well, another name that I don't think is really going to go anywhere. Boeing. We could see F period end up. So see how it's pausing in this volume right here? just kind of pausing, right? Doing a little bit of backfilling. Another mechanical low from the F period. We pause here, get above this 43.30 where all the volume was at. They'll probably look to push it up to the top of that gap, that 34. But we're still, still one time framing to the upside here. With mechanical lows at the D low, the E low, the F low now. So and the target, let's look at the chart actually. You guys looking for 50, 43.50 is probably just a 43.50 is just a nice round number. He's just probably picking that number, but 43.90. $43.90 is the top almost of that upper balance that we were in before we had that breakdown. So if you remember, this upper balance was up here. Reality would have that low. So this was that upper balance. We had kind of that accepting bar of the low of range, then the liquidation the following day, followed by another balance, an ugly balance, kind of just like this one. This was a pretty ugly balance. And we had traded it like where this was our balance zone. This was a look above balance, fail, come back into balance, acceptance to the low side, and then the push down. And so today, as we apply balance rules, right? Because we've been talking about this balance zone for 6 days now. We're gapping above balance. It pulls, almost right down to the top and then goes balance rules. Let me pull them up for you guys. Oops. And anytime I want to find anything, I really just like go to the Jim Dalton website. There's a glossary on here. It's free. E for balance, balance rules. Right, they're right there. And if I can't find them on here, then I head over to shadowtrader.net and find them on there. But in reality, I mean, they're the same everywhere. Just people have changed them just a little bit so they can use them. They can use them accordingly. These are my balance. So see, we filled in. Remember, we had this kind of thinner volume right here. It was this light blue color. And now it's switched to white. So it's starting to say it's getting up. I think I have the white. It has to be above 50% of the total volume. So that's showing that we're above that 50% level. The red, I think I just have on like the top 90. 80 and 90. Starting to see some puts hit the bid. See, they couldn't take it right. The market's just kind of pausing. There's a lot of I think fear to get short today just because of the gap up, and They don't want to get ripped up by some more news coming out. Another key thing too, so, and this helped me stay on sides big time. And Jim Dalton was the one who showed me this. So I want to make sure I give credit where credit is due. And we used this for a different event, but if you guys weren't here before, what the smartest thing to do is when the initial market reacts off the Fed, you're probably going to get a little bit of this, right? A little bit of chaos. But what we want to do is notice where price is at or mark it on our chart when the 2 o'clock hits, when the actual report comes out. And then after the initial chaos that ensues, is price below that level or above that level? Right? So even if the market's way up here and then all of a sudden you get this chaos, but we're below, I think it's probably a little bit safer to play off of those, to use it as resistance if it's above and to use it as support if it's below. Basically. That's what I've kind of been doing with all of the reports, the non-farm payrolls, the Powell reports, any news events that come out that cause the market to go a little bit chaotic. One thing that Jim said with some of those reports is never look at the number. The number doesn't really matter to people like you and I. Number more matters to, big money. They're going to have to readjust a lot of positions. Anybody taking any trades today that they want to share?
Yeah, me. I'm in a long.
Oh, you're in a long right now?
Yeah.
From where?
I'm literally at break even.
Okay, long under control.
Mm-hmm.
What was you want to talk us through the thought process on the trade?
Sure. Basically we came down to 43.17, and that's basically what I'm calling my bottom. And once it, or what time was it? It was right at noon when I entered the trade. Basically it came up. I saw it go down, and I was like, okay, we're gonna go test the bottom again. And we got rejected, and then that's whenever I decided once it broke that previous level of resistance, that's whenever I entered the trade. And we went up, and I was in the green, but I thought there was going to be continuation, considering we broke the other previous resistance by 1 tick, but then we just came straight back down into this little
Back in the
area right
range.
here. Yeah, back in this range. So, I mean, like, I'm a couple ticks in the red right now, but I mean, until we, break another level, then I'm not really sweating it.
Yeah, and there's probably going to be a decent amount of rotation throughout the day too until this meeting starts.
What time does it start? Our time, 11:30 or 12:30?
11. He'll be at 11. Well, 11 the report will come out and then he'll actually start speaking at 11:30, yeah.
Oh,
Not for a while.
you seeing anything specific right here, Brad, that I should know?
No, I mean it just looks like it's rotating. I mean that F low is fairly mechanical, but there's just so much volume. I could see us trying to go back down and try to maybe test these lows. I mean, all these lows are pretty mechanical, so if it does come down to test those lows, you might get a flush, and you might get a similar thing what we got on this F high. They'll just run some stops, just run some stops and then come right back into balance. Those are kind of like the two things that I'm kind of looking for. Is I'm looking for this F period to maybe break down, people buy it, pops back in. That's when I'll probably try to buy it and then try to trade back to the top of value. These trades in here are going to have to be, I mean, the market's pretty slow right now, so you can have a nice tight stop and shorter trades. And today's a day where you're going to have to get paid. So next time it comes up there, Jared, you're going to have to profit at least a little bit.
Yeah. So I got one take profit at 43.30.25. And my next one at 34.25.
Oh, okay. Copy again. Yeah, looks. And you're in from the 25, you said?
Well, 26.
I mean, if it gets above that 31, that 30 quarter is a good spot to get paid. That 31, yeah, we should probably head up towards that. Honestly, I think probably that 39-40 level. But it'd be safer to look to get paid up.
Yeah, just because that's where, the downside really kind of started. So I was like, if we can go up, test that level, I'll take profit there. Even though we might go test that high, rather just take a profit.
See, what I'm thinking here is we had a bunch of capitulation here because we had a lot of buying here at the 15 on the way up. A lot of people tried to hold the short down and then really started to run up, but here could just be capitulation where this C period just dumps, but doesn't actually do anything, and buyers brought it right back down to where they bought it before and then ran it right back up. So, well, not all the way, but D period came back up. So it really doesn't look like the sellers are very strong today, and any of the downside that we've seen has pretty much just been liquidation. But it is interesting. You're seeing first where that capitulation point happened, and then we're seeing a decent amount of volume starting to form above us. Oh, that's what I wanted to say.
Don't like that.
Like that. I think Jim is hosting a public webinar today, 12, 11, 10, 9. Oh, it's on right now. I thought it was at 12. Interesting to hear what he's saying for that. Oh, it's just an upcoming thing for their primer course, or primer as he calls it. Never. This is actually a decent sign for Bitcoin too. We had, that kind of that pop, lock, and drop that we talked about, but we're hanging above that 39,136 level that we've kind of been tracking. And with this push up and test of this upper area, yeah, it came back down, but then it came right back up, started to build some value above where we expected those sellers to be at, and then put them in. So we might have had some changing of the vision in here, where we had people short, right? Short here. I mean, shorting all the way down, ran a bunch of stops, came right back down to where all these buyers were buying. They bought it again, popped it up above where sellers were at, and these sellers might have decided, okay, we sold all week, made our money. Let's make some money to the upside. Now, when Elon becomes president and endorses crypto, this thing will be off to the races for real. Like, America loves crypto.
Yeah, but it'll probably all be Dogecoin, so we're all fucked.
I'm still pretty salty about those.
Dude, I made the hell of a trade on that Dogecoin. That was so nice.
So did I, too. I made a stack of cash on Doge. The thing is, I just should have been more patient, and I would have made much, much more.
Yeah.
I
Who
still
would
own
have
it
thought
at
a
30 cents.
shitcoin would have went to $1 almost, or not even that? Like whatever. What did it peak out at?
70 cents.
Yeah.
Yeah,
mean, I
got
had-
lucky. I bought at 302 for $300, and I cashed out like 25 grand off $300.
Nice.
Oh,
Nice.
that was slick.
Yeah, and I got in even before that. I had Dogecoin for so fucking long, and then I ended up selling at like 10 cents, and then I sold most at 29 cents.
Didn't
then
you sell it
some.
on the Super Bowl, Brad?
I sold around the Super Bowl. I sold a little bit at the Super Bowl when it got like it was at like 10 cents or 9 cents. I sold some there, and then it went up to like 29 cents, I think was my second sell. And then I sold the rest out around like 49 cents. But I mean, if I would have just held all of it until, the 49 cents, it would have been, a really big chunk of change instead of just being like a
Right.
chunk of change.
I bought right before the Saturday Night Live thing, and that's
Oh.
terrible.
Oh God.
Crazy, because I tried to tell
Lucky
Jared to
dollar
sell
cost.
before that, and he was like,
Yeah.
"Nah, bro, it's going up." And I'm like, "No, you should sell it. You should sell it." He's like, "No, it's going up." And then fucking Elon just
Dude,
got on there
hey,
and did his thing.
I listened to you in the end, and I sold. I got out at 60 cents.
Yeah.
I was scared to death, but it paid out.
Yeah.
That's kind of disappointing. He talked about how aliens built the pyramids, and then some archaeology guy gave him shit, and he fucking capitulated. Now he's like, "Oh yeah, it must have been humans." Like what?
Well, you got to think also, it's coming to that point in just life in general. And I've been noticing this about myself. I used to be the type of person where if I had a strong belief in something, I would just start arguing with someone. Like if they had just a dumb, my opinion of their point of view was just stupid, I would just start trying. I mean, not aggressively because it's just not the type of person I am, but I'm very direct. And so sometimes it comes off like I'm just being a jerk, but in reality, I'm just like, hey, like, have you ever thought about this? Right? I do the same thing with everything because I try to get everybody to think about both sides of every situation. But it's coming to that point where everybody just wants to argue with everything, no matter if they're right or they're wrong. And so he's probably just like, you know what? I've got so much shit going on. I don't even have time to argue about this. I'm trying to fucking build a rocket ship to Mars. So
He has amazing power, though. Did you see when he said when he tweeted to get rid of whatever that app is, WhatsApp, and download Signal?
oh yeah. Well, I mean, you have to
Signal
think.
went up like 400,000% or some shit in like a minute, and yeah, he said to get rid of WhatsApp because it's he's out on Facebook, and it's a total spy software. And then he said use Signal, and I mean Signal just went off the chart, and it's just crazy. Just a tweet you can move whole markets. I mean it's just crazy power.
Great power comes great responsibility. That's why he's trying to save the world.
He's definitely an alien, though. Have you seen that? It has like a 2-hour like documentary thing where he's walking through the different tents for SpaceX. He's doing it's like a 2-hour interview.
Oh
You see
yeah,
that on
yeah,
YouTube?
yeah.
Really
I've seen
good.
it.
Man.
Did you watch him? Did he's like crawling out of his own skin. He's all these weird like body motions and neck things like not a regular person would.
He has
That was
Asperger's.
weird. Yeah, but I don't know. That doesn't make you move weird, though, does it?
Yes, it does. Yeah, Asperger's. The people that have Asperger's have a tough time with uh, interpersonal communication and eye contact and things like that. Like honestly, like him being as forward as he is a. I mean, it's incredible, honestly, because typically people with Asperger's are very socially inept, right? It's tough for them to be social. And he, I mean, he, even though you can tell he is, yeah, and I agree, it does look like he's crawling out of his skin, especially in that interview. But in a lot of
Yeah.
interviews, it looks like it. But I think it's because he's forcing it out. And he has a speech impediment too, I think, that he doesn't talk about, but he does have it. And you can tell that he struggles through it. He does it, I mean, he does it amazing.
I mean, everything he touches. I mean, that phone that he's got just came out is unreal. Those houses are crazy. I don't know about the truck though. Coming out, but the truck he's got they're doing an add-on that's a catamaran. It's
The
like 20 grand.
the Cybertruck?
Yeah.
That's
You can
not
buy
that
a boat.
that was just a joke. That thing's not
No.
real.
The
Does anybody
catamaran
have
is-
one?
No, it's not out yet. But
Yeah,
the guy
that's my
doing
point.
It, no. Well, the truck's not even out yet. But
Yeah, it's not coming out.
Well,
It's like-
It's not coming out, guys. I hate to break your hearts, but that thing's not real. That's just that's just Elon being smart. That's a publicity stunt. You think he didn't know that fucking glass was gonna break?
I don't think he knew the glass wasn't going to break, dude.
I mean, it just seems so set up. And when it comes to Elon, it just seems like a genius idea. I mean, let's look at the Tesla. Let me show you guys something. He's a genius. This is why I have so much respect for Elon and his just brain power. Look at this
It's not
chart.
him doing that catamaran. It's this other engineer. This black dude named Super Smart. I can't think of his name, but seemed like he was real, but maybe not.
I mean, it could be, but I mean, that was a long time ago, and I haven't seen any of them on the street. And I drive one. I think they're fucking cool looking. They look
Oh,
futuristic.
you're saying the truck is not real?
Yeah, the Cybertruck. I don't think it's ever gonna come out. I don't think
Oh,
it's. I think it was a publicity stunt.
no. Well, there's
Elon Musk.
They got
He
some.
changed his name on here. He's a fucking troll. Okay, so here's the top of Tesla. What date is this? January 4th. Let's scroll back into this psychopath's tweets. I'm trying to find the day that he put up that January. The day that he
shoot his
put
partner's Tesla out into the ozone. It was
that
crazy.
that was hilarious.
Well, yeah.
He also mailed. There was a guy that was shorting Tesla for a long time, and he mailed him a pair of shorts after Tesla went up over 1,000.
Great.
If that doesn't make you laugh, come on. Like, you know, that's just hilarious. That's just the ultimate troll. Oh, you want to short my stock? Here's a pair of shorts. You can. I guess we can't go back, huh? That's kind of bullshit, isn't it? I thought you could just go back as far as you want on Twitter. What's the deal here?
You can't. What's it?
Show me
That's
more
good.
tweets. Yeah, I just have a limited access here. It's only going to February 3rd. Oh, we're boys. Can anybody else go back farther?
Let me try.
Oh, here we go. February 3rd. Oh, here we go. It's loading. Taking for. If you just read through some of his tweets, they're just delightful.
I rescued this dude out in the middle of the dunes, broken down on his side by side, and he was all over. He gave me his card. He was the vice president of SpaceX.
Damn. That's a pretty chance encounter right there. That's pretty cool.
Yeah. You told me to come out there and see. I was like, all right. And then Hensley's card. I'm like, what? Okay. I never did.
I'm looking for the day that he posted, hey, should I sell Tesla stock? Or if this thing gets 100 likes or whatever.
He
Maybe
likes Lex Friedman.
he might have had to delete it. Look,
Oh, you know, because I think he got in trouble for that. Didn't he get in trouble for that?
he did kind of. But yeah, still pending, but not actually yet. Even though it does seem like in the United States we've been doing this guilty until proven innocent for a while now.
And what is an inside trading? I mean, seriously. I mean, what? Please.
Depends how good your lawyers are. If you're gonna get in
Right.
trouble for inside trading, it happens every day. I mean, if you remember who sold at the beginning of the year all the Fed shares because they didn't want conflicting interest. Like,
Even
oh,
though they were
so
buying XRP.
you motherfuckers sold the top? What?
That all-in podcast is great.
Remember?
You ever listen to that?
I think I listened to it the other day. That Trump was on it the other day, and it was a pretty funny interview. Right, that's the one that Trump was on.
I don't know. I
That
didn't
the
see
one?
that one. On the all-in
Maybe.
with the four billionaires.
Oh, maybe I'm thinking of some.
Yeah, it's the all-in is it's 4 billionaires. They just talk about everything. It's really good though. And he's got 6 kids. That's you know, not easy.
Big order hitting the bid here. 116 lots just smacked the bid. But price isn't really moving down very much, so traded right above it.
He lost a bunch of satellites a couple weeks ago. They all crashed into each other.
There's
Some
a
kind of
there's a Reuters I can't say it now, an article saying that he sold 16.4 billions of shares since early November, and the article was in the end of December. So between November and December, he sold 16.4 billion.
Yeah, and that's what I was trying to get to, is that he sold the top of his own stock. And he didn't just sell at the highs, he top ticked it. Like he sold the top. So either he's a genius and could see what was going on, or he got advised like, hey, this is gonna happen and we're gonna take a little bit of a dip and you should probably sell some stock. And he figured out a way to basically kind of convince people that it wasn't the selling that was going to happen with him selling that much shares wasn't going to be sustained.
I thought it was because he was pissed at the Fed chair for doing the unrealized gains or whatever.
Oh, here it is.
Selling to pay taxes or some crap like that.
That's what he said, right? He said much is made lately of unrealized gains being a mean of tax avoidance, so I propose selling 10% of my Tesla stock. Do you support this? This is on the 6th. This is here. So here's the 5th. The weekend is on the 6th, and then the next day Tesla dropped. Just the next day, Tesla dropped 15%. Just the next day. So, glad we found.
Well,
Yeah.
just the fact that an unprofitable company keeps going up and up and up, and anyways, crazy.
Tesla's not a car company. That's where the selling point comes, because people believe in him. You know what I mean? It's like any deity or anything like that people follow. I mean, look at Charles Manson. Never killed anybody himself, but people killed people for him. You know, can you imagine having the psychological ability or manipulation ability to manipulate somebody else to commit crimes for you? I mean, it happens all the time, right? But could you do it to, you know, a million people? Yeah, that's the thing, is that he has that power because of, he's rich as fuck. And he just stays, he's just smart when it comes to staying relevant. Because some rich people you don't really hear much about until they do something. Like Mark Cuban, he's rich as fuck and you don't really hear much about him.
No.
Unless you look for it.
And Elon, he's got an amazing use of his time. He does long interviews with a lot of people. Like he's always, he gets a lot done somehow.
Yeah, that's where it comes back to him. Yo, Paisley, what's up, man? Hey, we're in the Zoom. Jump on there. I haven't talked to you in a minute. Long and short in the chat.
Wow.
Hey man, I just saw that.
Hey, bro.
Yeah, I saw it on YouTube, so I thought I'd hop on here. How you doing?
Nice. Good. How are you? How's everything going?
Family
The
reunion.
weather finally chilled out a little bit for you, which is nice.
Yeah, it's been an interesting winter, man.
All the rain.
I mean,
Put it out.
he had, up where he's at, he had like fucking tsunamis.
Tsunamis and fucking snow.
Yeah, my friend, his whole property is like 10 feet in water.
Yeah, man, we're like right on the river today. We got sunshine for the first time in a long time, man. Yeah, it's good.
That's good. I'm glad to hear
For some
that.
reason, you got square clouds over. Very interesting.
How are you guys doing?
Good. The Bank of Canada just put out that they have a team on their central bank that's dedicated to crypto research right now. Canada's a pretty big player, at least. They're not a huge country, but yeah, they're putting out a bunch of crypto research.
Man, they have
He caused a run.
advertisements on the radio for crypto jobs here right now.
What's his name? Caused a run on the banks in Canada. Fucking trying to freeze everybody's accounts.
Oh, Trudeau.
An idiot.
Yeah,
but
he's a dingus.
Yeah, no, I don't think anybody in Canada really likes him. Yeah, I've been doing good, man. I've lost like 25 pounds. Took that Jim Dalton class.
Me too, bro. Good.
Hell yeah. Feeling good. It's good to hear.
Yeah, are you feeling better? Better where you had?
Oh yeah. Yeah, I'm feeling a lot better.
Yeah, you were having some issues there the last time I was around, and you're getting better.
Yeah.
Your guts are acting normal again.
Every once in a while. So I was having those issues where I'd wake up and I just felt like morning sickness almost, right? Like I just wanted to throw up like all morning. But I've been feeling a lot better now. Better diet, better exercise, just better. It was kind of like a reality check where I was like, I feel like I'm Canadian.
Hey, fuck you.
But included with like the medicine, and then I do still have some underlying health issues that are going on that are in the process of getting treated, but I feel a lot better, and that's kind of that's the important part.
Yeah, that's definitely the important part.
Seeing a little bit of a breakdown here in G, one tick above E, right? More mechanical than ever. Watch this thin volume spot. We didn't spend much time there. And so the longer time that we just keep bouncing off of that level is just making me think, well, here comes short covering, and then back up to the top, right? There's one tick below, starting to fill that volume in, back above. This is the area I'm looking for to get long here. Nice tight stop where the volume drops off. But if it does flush this, if it doesn't flush this and holds, then I'll probably look to be getting long up here at the 20. Because we have our support 20 to 15 really. Yeah, 20 to 15, even down to the 13. Pretty wide support range, but it looks like a decent opportunity to trade back to that volume up here at the 25. How did any of like your house get messed up at all, Paisley? Because I know you guys live like not far from the beach shore, I guess.
No, my house is a-okay. It's yeah, we're like the other side of the river bank where we live though is like yeah, a whole bunch of it collapsed down, and like 9 houses on the other side fell into the river because like there was just a bank slipped away and it just like collapsed like 50 yards of the river bank and it just drug all the houses down. So that was pretty crazy. And then right after that happened, it snowed like a foot and a half. And the snow here is really weird. It's like super heavy, and then like made all the trees fall down. So everybody was out of power for a long time.
Oh damn.
Yeah, man, it's been a wild winter here for us, and just like yeah, kind of like just trying to figure it out. Now the weather is nice, and I was gonna do this tiny house thing, but I think I'm just gonna like not do the tiny house thing for a minute. I got some other options that I think I'm gonna work out instead. And yeah, I'm not sure, man. Like I said, life changed a lot for me, and so I'm still
Yeah.
trying to like work out the like life changes that are occurring. So there's all those elements that are part of the like weirdness of life. But right now we've like got no mask mandates, and they're gonna lift all the vax passes and shit for us. So all that stupid stuff is gone by the wayside, and life is kind of returning back to like some normalcy around here. I don't know what's like down there for you guys.
I mean, pretty much. Well, where I live, I feel like they never even thought about COVID. They're like, oh, what's that? But yeah, in like the central part of California, they're starting to release some of the mask mandates. They haven't taken them away at the hospitals or anything like that yet, but so there's that 25 that we were looking for right there, guys. Boom. Oh, it doesn't want to fill me? Oh, only 25 contracts.
I'm just excited to get back out into the world. I mean, like our restrictions here are just kind of bogus. Like I can only go to the like grocery store. I can't go and sit down with a meal in a restaurant with my family. It's like kind of weird. So I can't wait for all that shit to be gone and over with. Then I can just like go out and live my life again.
Yeah, and then just people will just start being normal
Yeah, well, that's just it. It's weird.
People
Even
are,
though
yeah.
I don't think people, the man, because like the mask mandate thing is off and it has been off for like a week or two now, and like there's still a heap of people wearing it, and you hear people like giving people the gears out in public, like, why are you still wearing your mask? You know, you don't have to. And it's like, fuck, leave them alone, man. Just like if that's what they want to wear on their face, like I don't bug you about wearing a fucking pink t-shirt. Like, piss off, all right?
Right,
Like,
right.
let the fuckers wear the thing on their face if that's what makes them feel comfortable, and you don't have to. So be thankful for that, and shut the fuck up and let them wear their pink shirt and their mask.
Yeah,
Personal opinion.
No, no, that's just a valid statement. Really, there's a lot of people that are just so weak high on the G high and the G low here, guys. But people are so involved in what everyone else has going on. It's just crazy. In Korea, I mean, I'm talking. This is back in 2010. You would see people wearing masks all the time, and it wasn't because of COVID or anything like that. You would just see there goes that break.
Mm.
So let's see if we get it. Buyers here. We're at the hold. I'm not seeing any news yet. Price holds. So this is, remember what we said, when price holds there, good chance for continuation. We want to see it reject, right? We'd like to see it hold on the way up, but if it holds on the way down, there's a good chance for continuation. So I'm staying out of this one here for now. But yeah, I mean, there's so much involvement everyone else wants to be in everyone else's lives. But when I was in Korea, we'd see people wearing masks all the time, and it's just a common practice when you're, not feeling well to just put a mask on, right? It's not gonna the mask isn't for, that's what people's misconception is. The mask isn't for yourself, it's for everybody else. So if you're not feeling well, mask up. But yeah, if you're feeling fine, then but you don't need to wear a mask. But if you're not feeling good, do everyone a favor and put a fucking mask on.
Be a goddamn smart human and compassionate people do that kind of stuff. And yeah, I don't know. It's weird. It's weird the dynamic that people have about it. I don't fucking care. I'm just gonna leave it alone.
Well, did I
need
ever
to see people living their lives again, man? That's all I care about.
tell you when COVID first kicked off, I was at the gas station with my son, and some lady was standing behind me, and I was wearing a mask. And the gas station right by my house is owned by this little Indian guy, and he had, at the time in California, it was like a mandate, and there was like people going around shutting down businesses for finding a bunch of people that aren't wearing masks, right? And so, of course, this guy's a small business owner. I'm not trying to fuck up his business. And this lady behind me, and she is big, right? Like over 300 pounds. She was a big lady. And I hear her just kind of like whisper under her breath about, how these scared people wearing masks. And I just, yeah, there's the continuation there, guys. I just kind of had enough of her shit. And I said, I just turned around. I said, lady, this mask isn't for me. It's for your fat. And I was kind of just in a bad mood. And I shouldn't have reacted the way that I did. But I said, this mask is for your fat ass. Because if I get COVID, I'm going to be fine. If you get COVID, you're going to fucking die. I was like, and this guy's business is on the line. So you not wearing a mask in here, health inspector comes down, shuts down his business. Now he has to find another way to feed his family. I was like, you're just an inconsiderate person. And you should be lucky that there's stupid ass laws like this. Because if there wasn't, I would take all your shit and there's nothing you could do about it. And then she just didn't say anything. And my son's like, Dad, we're going to take all her stuff? I was like, God damn it. I'm trying to teach a lesson here, and this lady just made me ruin it.
You gotta tell Curtis, be like, that's all you got from that?
It's like,
Kids, yeah,
just
that's
like,
great.
Oh.
but I think the COVID, like with people being inside, people are not, meant to be alone. That's why people that are in solitary confinement normally go insane, because I don't think as a human that they're meant to be, by themselves. And so now it's kind of like everyone's like rediscovering the world, like learning how to communicate with humans again. It's like a,
Well, it's weird, man. I don't know if you guys have this. Like, I literally caught somebody last night trying to steal gas from my van, and I live in the middle of fucking nowhere.
damn.
Like they had like popped my gas tank thing and had the hose in my gas tank, and they were gonna be stealing my gas. And I don't like. I'm gonna get a dog now because of that. Because I don't need people walking into my shit and trying to steal my gas, which is so weird, man. Like, yeah, it's people are acting really fucked up right now. I don't know if it's just here or if it's everywhere, but man, has it ever gotten kooky around here?
I don't think it's just there.
Well, I don't know. I'm pretty sheltered, so like, it's just pretty strange. Like living out in the forest. Yeah, but man, holy fuck, it's gotten nutty with people out here trying to poach your gas and stuff. And I mean, I'm out of town. And town is actually town with like 5,000 people. We're not like near a major city or something. So it's kind of weird, man. Times are strange. And trying to like, uh, trying to teach your kids that, like, you got to like fight for your shit.
Yeah.
right now. Like my son had to like watch me run out of the house, after these people that were like going through our shit, and he's like, "What's going on?" And we're like, "Well, this is the world now, man. Really?
Those people are lucky that you live in Canada and not Texas. They would have just got
Okay,
shot.
dude. Yeah, well, I didn't say what I ran out of the house with, but yeah, it was yeah, it's intense, man. People are acting real weird. Things have gotten kind of strange.
And it
I'm
could.
looking
Go
I'm
ahead. Go ahead.
looking to get farther into the forest.
Yeah, that's what my brother and I have been really talking about, moving up to Minnesota and starting our farm up there and just saying, fuck it, I'm done with all this. 1 second, guys, I'm getting a phone call.
Not a bad plan, man. How's trading been going? I guess we could talk about that, since that's probably why everyone else is here.
Sorry about that, guys. Oh, wife just got she hates a fucking dinner. Only 6 contracts traded on that low. What's that?
I just lost internet. Just gonna watch what I say.
Oh, did you get banned?
I don't know. I'm having to use the hotspot on my phone because I don't know. Isn't like those Trudeau comments. I guess
And
I did say anything.
hour and a half. Now, I mean, there was a little bit of liquidation that's probably due to the FOMC meeting coming up, but we can see on this low we didn't get much volume, but you are getting volume here. But if price gets above it, that test of volume, I'm more inclined to wait until we get back above that 15 to look at anything to the long side. Everything's pretty mechanical. Well, it's kind of cleaned up now. They didn't get any follow through here.
You been doing any crypto trading, Brad, or you just
I have been actually. I've
in
been.
all kinds of realms still?
Yeah, I mean, I have been all over. But I have been doing some Bitcoin trading mostly off of this level that's been here for a while, and just kind of using it as my pivot, just taking longs above it and shorts below it. I haven't really traded much else. I've been watching. If you scroll back on the YouTube, here, let me find the date for it. Alex did a webinar for us. What day was it?
Yeah. I don't know that.
Day was that on? Alex, is Alex here? That stuff is in an hour.
It was
Yep.
like Thursday, Friday last week, wasn't it?
What was the webinar on?
So the way that he trades, what he calls shitcoin.
Oh yeah.
But he's been nailing it lately. I mean, he's been posting everything in the Discord for a while now. I've been kind of watching it since December. It's just I've been
section?
under the altcoin section in the white Discord.
Check it out.
Yeah, and I mean you can scroll back. Like he's been posting it for a long time. His strategy does require a lot of risk management. Let me find it.
What is he using? He's not using TPO, I guess.
You gotta watch the video. He is not using the TPO, but it is on. I got it right here. Post it.
I come across this indicator that's really Kick-ass.
He just, I mean, his brain is the indicator on this trading style, and it requires like a super amount of risk management and consistency as far as like conducting the plan. But this is the video here where he kind of talks about everything, and it's about, this video is an hour and 5 minutes, and mostly you can just fast forward to where he starts, and then I mean it's 100% worth the hour and a half watch. And then once you start to do it and start to recognize it, I mean, it's just nice.
I've been using the directional movement index. And
Oh, the DMI, yeah.
Yeah, dude, that is on.
Have you been
Cool
using it
timeframe for scalping?
for scalping? Yeah, it's nice for scalping.
Oh, fucking kills it.
Post it. I'll post it in the YouTube for you guys as well too. You guys have the definitely worth the watch though. You guys should head back and check
Hey
that.
Brad, so do you think where this kind of bottomed out is going to be just like a level of support? Because there was only 6 contracts traded, and it just doesn't look like there's any follow through. I mean,
Well, so down here, what we're seeing, what we saw initially off that bounce was short covering. We got back into this low volume and then came right back down to where volume is at. So for me, what I'm looking for is I don't really want to be getting long until we get back up into kind of the core of the value and try to trade it back to the mean. That's why I was only targeting that 25 on that long. I mean, I got in late. I only took that trade from, what was my entry, 21.75 and 22 quarter. I only get in on 2 lots, and I kind of had to pressure my way in, and I got out 24.75 and 25. Luckily on that second push, because I was about to flatten. But until we get back up here, that's where that retest of volume and possibly up where this low volume is at. But as we start building more volume lower and lower, it just makes me think that they want this downside. And you've got to remember, overnight inventory is 100% long. For some reason, when I was loading this, I don't know why it's doing this, but it's doing this. It's like there's data missing from Sierra charts for some reason. It's probably what we talked about yesterday when I re-requested a bunch of data and they said I was going to get a timeout for a week because I was using data. Bullshit. But whatever. So you can see, yeah, look, we're getting above it, and if we can get back above this volume here, that could be the pull that we need. But inside this level here, you see how it's just holding? That kind of makes me think that they're doing a little bit of backfilling, and sellers are just kind of coming down, getting some exchanges in, covering some more shorts. So there's no real commitment to any direction, which is why I'd like to wait until we get up here. Or if we start to get back below this, there's not really much support, and you can kind of see, I mean, it doesn't really do a good job at showing Globex because it didn't just trade straight up like that. But overnight inventory, here's the settle was 53.75, spent a little bit of time below that, but pretty much everything else was above. Even the volume compared to the time right here, right? You can tell, look how much volume came in here and moved price higher. I wish it wasn't hiding it from us for some reason. But there could be, I mean, if this thing starts to slip, especially with Powell coming out, I mean, this thing could easily just get hammered back down. So it's a real tough spot at these lows. But if we keep, I mean, the H kind of rejected that low volume here, so above that 15 might be a decent chance for another one. But we did, we were one time framing up. This G period gives us a cessation of one time framing, letting us know that the market will probably be a little bit more rotational now to both sides. So we could get some more extension down and start to kind of fill in value from the open in this lower part, right? And if we separate here, something that I like to do a lot of times, you can see this initial news event led us into short covering, right? So we popped up, bunch of people got short right here, and you can see every time it was coming down, it was getting lower. Boom, short cover, short covering, short covering, and then finally a liquidation. Once they trapped enough buyers and price got a little bit too low, everyone's stop was, I mean, we kind of saw it, everyone's stop was at that C low, which is here. Surprise, surprise, there's some single prints there. They're just over here trying to play these little. Hang on a second. What's going on with Netflix? Netflix just had a huge spike to the upside. Oh, good old Joe's on too. You guys want to watch some? Oh, hang on. Oops. What's up, Jake? How long until Pal Talks? He's on in an hour and a half. Then move from Ninja Trader to Sierra Charts, better platform. I moved from Sierra Charts or from Ninja Trader to Sierra Charts because, well, one, I got a really good deal on the commissions when I switched over to that stage 5 trading. And then two, Sierra Charts doesn't seem to bog down my system as much when I'm running a Zoom and the live stream. So it just makes sense because what was happening, even if you watch back some of the old Zooms, I was getting a lot of stuck data, right? Where
How much RAM are you have?
I don't fucking know much about the inside of the computer. I just know that my computer is pretty beefy.
Yeah.
Because Jared, my buddy Jared that's in here, he knows a lot about computers and he was kind of just telling me what the good stuff is when I bought my computer. So I just went for that. Oh. I'm trying to pull up.
Yeah, I don't like the way it looks right here, Brad. It looks like it's getting ready to just flush.
And it definitely could be, to be honest with you, just because the look at the volume coming in as we're getting lower and lower here.
We immediately rushed $350 million in additional aid to further address their needs. Hundreds of anti-air systems, thousands of anti-tank weapons, transport helicopters, armed patrol boats, and other high-mobility vehicles, radar systems that help track incoming artillery and unmanned drones, secure communications.
We don't need to see
satellite
him talk, right? We can just listen.
Analysis capacity. And it's clearly helped Ukraine inflict dramatic losses on Russian forces.
So let's look for these thin spots here. Let me turn them down.
$200 million to keep a steady flow of weapons and ammunition moving to Ukraine. See that rejection of the thin volume. So as it comes back up here, look to see if they backfill it and force it back down. I guess these technically aren't really considered single prints, but that's where the liquidation started from. So it's good just to mark a spot like that. And I mean, the volume kind of marks it for us. We had a big push up off of that level. Now a big push down off that level. This 43.15, a good number to remember as we head forward, you know, as a support and resistance level. But as we come down, you saw the volume early on where this 305. So if it breaks this level and breaks too much below that level, it doesn't seem like there's a lot of buyers present right now.
Oh yeah, we're getting going down.
Request of President Zelensky, we have identified and are helping Ukraine acquire additional longer-range anti-aircraft systems and the munitions for those systems. Our new assistance package also includes 9,000 anti-armor systems. These are
are portable, high accuracy shoulder-mounted missiles that Ukrainian forces have been using with great effect to destroy
World War III.
invading tanks and armored vehicles. It'll include 7,000 small arms, machine guns, shotguns, grenade launchers to equip the Ukrainians.
Grenade launchers.
The brave women and men who are defending their cities as civilians and
I mean, sit around, listen to the record player, and listen to words.
as well as the ammunition, artillery, and mortar rounds to go with small arms.
You know, the U.S. has a fully automatic grenade launcher.
This will include drones.
Like, it's mounted to like the top of all kinds of vehicles.
Demonstrates our commitment to
That'd be fucking
sending
fun.
our most cutting
Mark 19, it is fun. It's just like, it makes this noise like this. Whoop, like the whoop, 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 fast as fuck. And it just blows up everything around it. It's dope. Where's, is Luis in here? He's probably used it before, I'm sure. He was a scout. Probably got a good... Like, the scouts normally use it. It's just an area weapon, and you're not supposed to shoot it at people. But, you know, accidents always happen.
Could be a long and difficult battle, but the American people will be steadfast in our support of the people of Ukraine.
So he's not making it sound like that, you know, peace that they talked about this morning that gave us that rip was real. He's making it sound like they're going to need, I mean, $15 billion is how much we're sending.
We're going to give Ukraine the arms to fight and defend themselves through all the difficult days ahead. We're going to continue to mobilize humanitarian relief to support people within Ukraine and those who've been forced to flee Ukraine.
So you see how we got to that 5? No buyers were interested really, and just kind of pushed it back down. So if what we'd like to see, if we were looking for any upside, is a rejection of prices down here. But now, you know, now we're looking at one time framing down since the FI, BH. And for me, that's not something that I like to try to fight with. I'm not really a huge fighter against one time framing.
We will support Ukraine's economy with direct financial assistance as well. And together with our allies and partners, we will keep up the pressure on Putin's crumbling economy, isolating him on the global stage. That's our goal.
Still seeing a decrease of volume in these past few half hours, but we'll see when H period finishes.
Together with our allies and partners, we're going to stay the course. And we'll do everything we can to push for and end this tragic, unnecessary war. This is a struggle that pits the appetites of an autocrat against humankind's desire to be free. And let there be no doubt, no uncertainty, no question. America stands with the forces of freedom. We always have and we always will. I want to thank you all and God bless you. And I'm going to walk over and sign this bill to allow the drawdown of those materials. And may God protect their young Ukrainians who are out there defending their country.
God, and these grenade launchers. Signature. See how the army switched back to these old pinks. This uniform is called pinks and greens now. It's an old throwback to World War II.
Delegation authority under Section 5.
They're dope looking, I think. Way better than the blue.
1961, translated into plain English, a total of $800 million in defense arms.
They said 800 million.
Mr. President, what will it take for you to send the Polish MiGs that President Zelensky is asking for?
Market just selling
I'm not
down.
going to comment on that right now. I'm not going to comment anything other than what I told you to say. Thank you.
Well, Mr. President,
Yeah, he's- There it goes. And for that open, so this is what we talked about. There's just no buyers down here. It doesn't look like selling is strong either. At all, really. It just looks like there's no buying. And if you look on the DOM, right, you can see some of the selling on the way down. These are the red orders are orders that are hitting the bid, and blue orders are orders that hit the ask. And we don't have much down here because we haven't been down here. But you can see I mean, right now we're actually seeing a couple of orders step up down here at the lows, and we're starting to see volume start to accumulate down here. And then you just see a nice little stop run right there, 1111. Well, I guess not a stop run, but just like, you know, someone just trying to force their way in, or someone forcing their way out, short covering. So a decent amount of volume started to come in right there at the end, which makes me think that this move back up is probably short covering. Looks fairly thin too. But remember, you know, if I only show the DOM to explain things like that. If you have a DOM and you're watching it all the time and trying to get some of these longer trades off of it, it's going to be misleading a lot of times. That's why I think Delta kind of a joke for the most part. Even though I do like the CVD on the I mean I like the CVD on the ES too. It's just I don't utilize what I think most people utilize it for. I really just look for divergences when it comes to Delta. So if you're using Delta, or if you're looking at the DOM thinking, you know, okay, all these orders are hitting the bid, but look at all these buy orders. They're buying, but someone is selling that. So you have to think, is this buying right here a seller that's buying his position back aggressively, right? And look, we return right back to the volume. So chances are that little move up was short covering, and look who came in at the 43.01, 78, hit the bid, move price back down. You know, sometimes it's nice to know that, but it's not necessary, right? You can see it all right here. And I think until you start to be able to see it here, using the DOM is gonna make your trading worse. Using the DOM, the reason I have my DOM up is to manage my orders, because that's why I like to manage the orders on. And I mean, I know how to use the DOM too. I've kind of switched off scalping and mostly looking for these moves. But I think until you start to fully understand that TPO, adding the DOM is a trap. And if you ask Jim Dalton, god damn, he fucking hates that thing. So real psychological level here, 4,300, right? It's real easy to notice level. Still haven't filled the gap. And remember, the gap, when you look at it, especially when the chart zoomed in, you're like, oh, that's not that far. But the gap is to down here, 42.63. So, you know, 40 points below us. Also, for those of you guys that have been reading the trade view every day, I'm just chalking this week up to pretty much a fluke with how lucky I got. That thing was pretty good all week. I want you guys to get disappointed when I post one tomorrow and it's just all fucking wrong. And if you're not reading it, you should definitely check it out, especially if you're trading futures, and at least compare it to your perspective, right? I'd love to hear from more of you guys about your perspectives too, because that gives me, you know, opportunities to look at things ways that I haven't looked at it. And if you read the trade view and our, you know, opinions are similar, I'd like to hear that too, right? Because maybe you came to that conclusion in a different way that I came to that conclusion, and that could really provide some strength for the argument, you know. So there's a few of you guys that do hit me up pretty regularly, and you know, I encourage everybody, any questions, you know, or trade plans, stuff like that. That's why I like that Alex posts all of his, I mean, he said he doesn't post all of them, but he pretty much posts all of them in there. And you know, even though we have a different style, a lot of times he's posting those Luna trades, and that's really what got me looking at Luna, because you know, I don't really you know, I like Bitcoin and ETH seem to be the easiest for me as far as liquidity goes, but a lot of those Luna trades have just been killers. Let's see how we can see. Look at ETH and Bitcoin leading the way up today. Look at XRP still just living the dream. Can't get rid of me. Maybe that's what Canada's going to do. It's going to adopt XRP. That's what they're looking into. A lot of volume coming in down here, but it's above that previous volume that came in on the low, right? So we had what looked like a lot of short covering and then buying coming in on the low. Now we're starting to get buying a little bit higher. I was, you know, still not messing with any longs until we get above that 15. And if you miss, if I miss this upside, then still got a time. Here's our tool. $40 minutes. Keep it right there so we don't. Nothing worse than being in a trade that looks good and then a fucking news report comes out and then boom, you get smacked. Has anybody been looking at any particular stocks for the long term, or as an investment opportunity? Because the market is down, you know, 15%. Nasdaq being down, you know, over 20%. VIX is down at 28. Oil's coming back down. It's down about a little bit over 0.5%, back down to 95. Long-term bonds are still just hanging out. ENX looks like it kind of chilled out a little bit, which is good news for the market, even though the market is kind of bidding down now. And then these short-term Fed funds rates are down. Not looking great. But we still have, I mean, TLT is starting to get a boost. So this is a good divergence economic wise. Because these are supposed to be, who's drawn on my screen? I don't know how to read. TLT going up is good for a long term, right? The 20-year, if the market's pulling back short term, they're supposed to diverge. They have been trading together for a long time now, though. You're starting to see some of these bigger names start to fade too. Apple's getting smacked a little bit. One of the stronger names lately, Amazon, still coming down. Tesla's been pretty strong the last 2 days. It's coming back down as well. So a lot of people probably ran the market up and are going to start taking profit before this Fed meeting. Still holding the low though. The yeah, gave it all up. Senator Warren's on right now talking about the meeting coming up, but I don't think she's talking about, so we need to waste our some people are just savages. I see a little bit of buying here. Apple's starting to kick it back on. Amazon's starting to kick it back on. Tesla. Quick snapshot of the sectors today too. You can see the big winners today. Financial. Getting some decent support down here. But this could just be, could just be some short covering from the trap longs earlier, or from all the shorts getting. And this is one of those times, right? You're seeing this, you're sitting here, you're looking at this, you're like, man, this is going to pop up. I can tell. And that's when you're a little bit too zoomed in, or maybe possibly getting some FOMO. Obviously 2 situations, and you can definitely play them. You just got to make sure that you manage risk here. But yeah, we could get a nice short covering rally that takes us all the way back up to that H high, that 15, and then those sellers could try it again from up there where they've tried it before. Or Or you could wait till we get to the 15 and above and then try the long once we hold above that 15. Right, there's opportunity to it just depends on, you know, how quick you can be. But as far as odds go, right here you're not really you're not really playing any improved odds, right? Typically every trade that you get into, we know is going to be a 50-50, right? It's either going to go up or going to go down eventually. The difference is, and ways you can improve your odds is by, you know, watching these buyers step up here and holding above that volume on a retest of it. So let's say price comes up here, comes back down, and then quickly bounces off of this. Right, there's a rejection of that upper, but we want to see it. We don't want to see it hang out here. There's already buyers here. So if it comes down here, they should be buying it again if they like it, right? And it should pop right back up. Not doing that, not right now at least. And that's what I'm saying, like, it's more of a 50-50 a trade from this level, right? A better odds would be to short here, but you also are shorting at the low, so that kind of decreases your odds as well. $43. Time to few more minutes until the next session opens up. So look, it comes to that thin volume and now it's holding here. Next session opens up in 45 seconds. So let's see, as it comes back down when this next session opens up, if they buy that same level, that 4,300 again, and start to run it up, or if they look to really hammer it down on this next session. This should give us a clue of kind of who's kind of trying to take over, right? We haven't really seen any mechanical references. Well, actually that G high is mechanical. One tick above the F half back, so never mind. But we are one time framing down, which is why I like above that 15, because that would at least tell us that there's good odds that we get some rotation when we break that one time framing to the low. Just turn there. So let's see if they can take it above this 05 here. Above that 05, we should see some opportunity if you're looking to get a short covering rally, but not below it. It has to get above the 05 before really trust it at all. And only trust it as far as I can. Buyers here though, that's for sure. Back down, bought it. Trying to trap here. Here they go. So look at that quick rejection, right? Those are sellers selling the half back of H. Those are weak sellers. Target that 9 or 10 here if you're long. These buyers are stepping up here. Right to the 9. Nice little rejection. That's fine. We've seen the selling from there before. That's where the volume's at. People are just selling a pullback there. Right, so if you're long, you want to see it hold above the 5. If it goes below the 5, that's kind of your sign that trade is probably going to be on. Like it might be over here now.
Damn, that sucked. I should have got out and then it came back and I took my stop loss into profit. Just took profit on it, but damn.
Yeah, it ticked that 9. I had my take profit on 9 and didn't get filled either up there because I just didn't trade any on the sell side.
I won't lie, I had mine at 1050. Oh, you had yours right on 9 and it didn't get filled?
Well, the only 11 contracts traded, and they all traded on the buy side. So, I was trying to sell. So,
yeah.
people still hitting the bid down here though. So, see how we went back down to that thin volume, or back down to that little volume nodule right there, and bought it back up. Well, they bought the 5 right there twice. Still pretty, pretty cautious for continuation. Didn't get a lot of volume up. Price got higher. But they do look to be buying the ask here. Buyers do. Stepping up and lifting the offer, they say.
Order submitted.
I wonder if AstraZeneca here. AstraZeneca released some news today about how they reduced death by 35%, 32%. They're getting a little bit of a boost off that. So look, it went back down to the 5. They bought it again down at the 5. No real fireworks yet. Not yet, Alex. Hopefully you ate a light lunch, though. Never know. So that right there kind of, for me, signals a little bit of strength here from the buyers. When we see a push down like that because that came down like right to like the 03 area here, and where we kind of have a thinner volume and then popped right back up. Seems to be that nobody really wants to sell down here. At least to me, that's kind of what it's seeming like right now. So and we're getting a little bit of like chop and rotation here, but looks like we might have an opportunity for them to look to push it up. They need to get back above that 06 again. And then, like I said, the 9 is probably a target there. If they really want to take it up, that's where they'll target, is that 15, because that's where they need to take it up to in order to get paid. Go back at the 6. There you go. They run them. They run all the offers right there. Still pretty thin. Still really thin. The fuck? Buy this thing, you cheap mother. There they go. There's a little bit of buying. Come on, keep smacking it. I'm like sitting here like, I'll take this thing up by myself if I have to. Go ahead and just shoot right up there to that 15. That's just so thin. They're not getting any help right here. Come on. We got 21 minutes until the Fed. Yeah, everyone's probably being a little bit cautious. They get going here though. Above that 950, we should start to see some short covering, and that could take us right to the 50. Got to get above that 9. Struggle fast. Got some interest there though. There's buying, one tick higher right there. We hit that 9/4. Hitting or lifting the offer at the end of that. Volume actually went up on that way down right there, that last period, but not by much. Listen to.
I won't lie, Brad. It's been so choppy today. It's just like, dude, at most I was up 350 and now I'm down 6250.
Yeah, today's
It's
been
like
a
it's
tough
just
day.
like, yeah, it just keeps going. Like it'll go up and then you're like, okay, it's going, and then I'm like, oh, I should have took profit because I could have made, $100 on it or whatever. And then it'll just come back and I'll move my stop loss up and it'll just like come down, take me and then go up. I'm like, God damn.
So one thing I don't know if you were here on maybe it was last week. One thing I want you guys to start focusing on is stop using that stop loss as a crutch. Right? I always want you to have a stop loss, but I want you guys to start taking yourself out of the trade. Don't put your stop loss and be like, let's say you got in on the 5, it moved up to the 7 and moved your stop loss to the 6, and then it takes you and then it moved up to the 9 right after, right? Stop using that stop loss as a crutch. That's what's happening here. So as it gets up, when you start to see it fade and you start to see it get weak, just press the flat button. You know where you bought it from. And if it offers you an opportunity to buy it again at the same spot, then buy it again and then trade it back up. But what's happening is you're leaving so much profit on the table, and even more if you're just kind of sitting through all of this. You got long at the 5 and your stop loss is here. A lot of times this is what I do is if my target is 9 or 15, in this case, my target was the 9 and I had my stop at the low of I, but really I was planning on taking myself out sooner. But if you're sitting through this and not moving your stop, then that's a little bit different. But if you're getting in this and then you move your stop up and then it hits you and then starts to rotate back in, that's going to cause a little bit of FOMO. So as you start to get a little bit more confident in your trades and seeing what's going on, when this thing's getting up there and it starts to fade, just get out. And then when it comes back down to that entry that you like, that 5, and you see what you saw before to get you in the trade, just buy it again, right? I really am not a huge fan of moving my stop until my first take profit gets hit, right? If I get out of the trade early, it's probably because I press control up, and that takes me up and out of the trade, which is how I remember that. There's still one time framing to the low side, and we saw when it came up here, right? They weren't getting any buyers. We had a little bit of interest, and then started to fade, and then now you're just seeing look at this. There's shit saying, ah shit, 18. Fuck it, I'll just wait. And then they just liquidated. Right? I don't think that was any real selling coming in. It didn't look like it. Just people just getting out of long positions. And remember, overnight inventory 100% long. They're just getting ready for the Fed, because the Fed is gonna, I mean, let's do some calculations real quick. With the VIX being at 28, then we do I like to use this, and it's called the rule of 16, and it's basically just telling you an implied percentage, the implied volatility that the VIX is telling you about a percentage move, right? So 32 gives us about 2%. We're at 28, so we're looking probably about 1.75% here. So let's switch over to the ES. Fed comes out in 16 minutes. Call it 1 3/4, puts us at 43.78 to the upside, and to the downside would bring us almost right to that weekly VWAP at 42.32. So there's a target to the upside there, to the downside there. That 4,400 is target. But so that with the VIX being at 28, you can't assume that the Fed can't do this. Right? This could happen on the Fed easily, right? And then the VIX is telling you that. So if you know that the implied move right here, I feel like that's short on the way down. Well, oh no, because I drew it all the way up to 4,400, 44.40 actually. It was actually like right here, but this is just the implied move. The VIX can raise and we can go, but this is just the implied move here. I mean, you're talking a pretty big range to get in here, which is why you're going to see a little bit of unwinding of positions. Probably, as you know, we're 15 minutes away now. You're going to start to see some real unwinding. Overnight inventory being 100% long, we can see it a little bit more clear here. Here's the close yesterday. Overnight inventory for the most part is pretty much straight up. I mean, look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 30-minute bars in a row, one time framing to the upside. Actually, this one broke the one time framing, but I wouldn't even count until this bar. You know, so that's a lot of inventory that's long, right? So Asia's long, most of London was long. We're seeing a little bit of the fix, but if we had some overnight traders, which I imagine that we did leading into the FOMC, there's some good activity in the market here. Trying to look at bigger. Back to the 5. Alex, you said you can't get on the right side. I'd have to like, I think we need to like break it down. That's why I'd like for you guys to share your trades, like, especially if we can see them, like the timing that you placed them, and then really compare them. You know, one thing that I was showing Jared when I was helping him is that he was over trading, right? And then once he stops over trading, he just nails it, right? But then as soon as he starts to over trade, and really the only way I can help you is I gotta see the trade. So if you're down to either screenshot them and send them to me, I'll definitely look at them, and we can schedule like a little session so we can try to help you out.
Hey Brad, I'm gonna run something by you. You're gonna laugh at me. Maybe it's just a conspiracy theorist in me, but yeah. I have my time set to New York's time, so at 12:50 for me, which would have been, not sure. You remember when we saw that like huge drop basically though, and it just kind of flushed down?
Yeah, 12:50. Yep.
Yeah, so maybe it's just me, but I almost feel, and I'm not trying to draw a bias or anything, but like some part of me always thinks that like basically some hedge fund company got the drop or something. Like somebody got the drop and they're like, oh, FOMC is gonna be bad today. And so they just like were told to get out and they just got out.
Well, so
And that's what caused that.
well, yeah.
And I think we're gonna see a huge rally up, and then I think it's just gonna dump. I mean, that's just what I think.
Yeah, I mean that's definitely a possibility. A bias to your theory is most hedge funds are short, and they've been short. This is kind of like the first time that hedge funds have been on the right side of the market in a while, and they've been shorting the market down. And the reason the market's been going down hasn't been really because of the extensive selling. It's just that there hasn't been any big money buying, right? We haven't seen, except for one day in January, we saw, Warren Buffett turn his fucking computer back on. But other than that, really nothing. Even that liquidation at 1250, there wasn't a lot of volume in there. Right. And so, I mean, yeah, I mean, I don't think hedge funds are playing this with futures for the most part. They're playing this with options today, as most people are, because of the VIX being so high, that range. And if you figure hedge funds, these guys are trading with hundreds of contracts at a time, right? And so, yeah, Double R, you can send those to me for sure. You figure if they're playing with hundreds of contracts and the market starts to move one, like you said, way up and then way down, well, what will happen is they'll get margin called, because if it moves 1% up and they're all short, or if it moves 1% down and they're all long, that's going to be a pretty significant emotional event.
Yeah, if they were playing it, but I mean, I think they got out. Because I think I think they want the market to go down. Oh crap. I think they want the market to go down, so Sorry. I think they want the market to go down, and since, we had such a huge rally up, I think they're just looking to get out, you know?
Yeah, I mean it's definitely I mean it's definitely a possibility. It's just we haven't seen them get out because the market really hasn't moved very much since the initial move to the upside. You know what I mean?
Yeah,
I don't think they're really out of their position.
I think they got out of some. Yeah, they're not, totally getting out. I mean, you would see a huge move if they totally got out, but I mean, I think they're just slowly just trying to catch these rallies just to get out because I think there's, more downside coming.
Oh yeah, well I mean smart money is still selling every rally. If you look we look at the chart, you can see we still I mean we got rejection off the middle of the range and we broke this. We can go ahead and remove this. But there's a trend line from the very top that everyone is shorting and everyone's been shorting rallies because this is a downtrend. Still we're still in a downtrend. So yeah, I think it makes 100% sense to either be taking profit up here or selling into the rally. As the market rallied up, just start getting short on the way up. Which is what big money does, right? Because they can hold
Hmm.
a short position longer than most people. But I'm trying to keep you objective, right?
Hmm.
You are a very biased person.
No, I'm really not. You know me. I'll enter along and then I'm like, nah, screw this. I'm going short. Like I'll flip on a dime.
Yeah, that is true. You're right about that. But just be cognizant that until we enter the previous day's range, we haven't even seen any selling because we haven't even closed this gap. And if there's not enough, like if this gap doesn't close during FOMC, one, I'll be shocked, and two, I'll just roll over to Apple and fucking slide 20 grand in there because the thing will fucking bounce.
Hmm.
There's no way that off of FOMC, if we don't close this gap, this thing will go to the fucking sky probably. Just insane. But with this downtrend, you'll get a bunch of selling, and that's what's causing all this ugly ass chop and these worthless. Even this balance wasn't too bad, right? Gave us some nice days and some pretty overlapping value days. But this was just it was a rinse, run up, rinse, run up. It was just ugly and no real value, no real time spent anywhere really. Um, it was just people got long, people covered, people got long again, and what we saw was that breakout of all the people that had been selling the rallies in this lower trend, which is why I had that trend line from here, and that's all this pump was just short covering, right? A bunch of shorts had to cover early, but they weren't able to really take anything else, right? And until we break out of this little cone that we're forming, remember, like I said last night, we could just keep trading sideways. Definitely a possibility. I don't think it's going to happen, but it definitely could. Until we start breaking out of these lows, I just don't want you to get so focused on that short side when the market breaks, because I do think the market is going to break during FOMC. It doesn't close that gap. Just make sure that we're paying attention to the overall perspective of the market as well. Same idea today. I think a lot of longs got trapped up here early on because they were trading price, right? Price opened here, boom, we're up 1%, and everyone's like, oh shit, again, we're gapping up. Here we go. I'm buying it today because I didn't buy it yesterday. I shorted all day yesterday. I'm gonna buy it today, and then they bought in late as normal human FOMO gets to you, and then there comes that capitulation. So really, I just think that the downside today was a liquidation of longs, people that have been long, smart money, liquidating, and then short money getting stopped out. Because we saw mechanical buyers, boom, 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 off this C, D, E, right? Mechanical short money, and then they just got washed out. They're starting to kind of form, and this is what we talked about earlier too, that they're starting to kind of try to fill in value gap, getting a little bit thinner now. But try to fill this in, we'll start to get a more balanced profile leading into the FOMC. Right? If you look even here, it's pretty balanced now. We've got good access to the high, good access to the low. For the most part, pretty balanced profile. Read that fucking study guide. Oh shit. Yeah, double R, whatever end of the week works. Whatever. I'm pretty much on my computer. I get off when the market closes. Sometimes earlier, depending upon what's going on in the market. I should have went and got lunch before this like Alex did, but I only got 2 minutes. But yeah, I mean, I get on the computer a little bit later in the day, you know, and I'm going to be on the computer. So if you send them to me every day, I'll get a chance to look at them most likely when I'm doing the trade view. And then if not, send them to me at the end of the week, and I'll definitely have time over the weekend. Until April starts, because my son's going to start doing track and field. Me calling Uncle Jared, teach him how to shot put. So there's that 10 again. This is kind of where they rejected price from earlier, right? We didn't see any more buyers coming in up here, and then we weren't able to get any continuation onto the upside. But we're back above that 950, and that's kind of the level I was looking at, that 950. If we get some volume up here above this 950, there's a good chance to go attack that 15. 52 seconds till the FOMC news gets. And then Pal's not on for 30 minutes, so remember that too. So they're not able to get any buying up there. Oh, there it goes. Right to the low. Mechanical buying off the low. Don't get sold on this. Just let it settle, okay? That J open is pretty much where we got the move from. PLT is going down. That's good. Really volatile right now. Best time to just stay out, guys. Starting to see some selling here in the overall market. Information technology, the biggest sector, is starting to go red now. There's the low. Remember, this is the first time we've raised interest rates since 2018. Let's see if they can close this gap here. 1800 on the low. Look at that. Holy. That was a volume there, and then boom, just a nice bounce. Go back above the J open here. The J open is here, my bad. J half back. Remember, we got this 1900 volume down there. There's a lot of volume to come in, not revisit. Just check on it. I'm sure it's okay. You can see there's a 200 lot order just sitting right on it here. Let's watch how it trades here. Banks are going down. That's not good. Couldn't hit it. Traded 375 lots there that time. And those all traded at the ask, at the bid, so absorption down there is what that kind of looks like. Said most Fed officials still see 7 rate hikes going forward, so there it goes. Test it again. Goes. Crazy, just that's where all the contracts are trading, just like in this one spot. We're starting to see some more volume come in now. People are starting to be like, okay, I'll sell some. So just, you know, like I said, when we go down and we get volume, typically it's a sign of continuation. As this volume starts to accumulate at the bottom, watch the low number, that 107. When it comes down here, they should start to try to attack the low. If not, that's just telling you that, there you go. If it comes down to the low and you don't start to see this lower number increase, that's kind of telling you that it's short covering and people are covering before the low. Remember, the gap is here, 63.25.
Couldn't really hear what he was saying, Brad. What was he saying?
Who?
The guy talking a little bit ago.
Oh, he was just reading the report, basically.
Yeah, what was he saying? Like anything?
He just said that the Fed is looking at 7 rate hikes, that Powell's more bearish on inflation, that the war, if it keeps going on, could cause higher inflation rates. Nothing really important. Like I said, when we have these news events, the key is to pay attention off where the initial move starts from, and that's this J high. So until we break that J high, you shouldn't be looking for any longs until we get above that J high. If you trade this news event the way that you should trade every news event. If you start to focus on those things like, oh, inflation is bad, you know, you'll start shorting the market in 2020 because of all the inflation, and then you'll be broke point here. Because the market went up for 2 years with bad inflation. So welcome to the US market, where the rules are made up and the score doesn't matter.
Ain't no shit.
For real, you know?
Me and my dad were talking about that yesterday. It's like, dude, earnings reports don't even matter anymore.
Yeah, I mean, you know who's been some of the worst traders during all of this is statisticians, who typically, you know, make some of the best investors because, you know, they really dig into the books of the market. You know what I mean? They dig, or the books of the companies that they're investing in. But now you look at some of these books, and you know, the price of the share versus the earnings per share, and then if the stock gives a dividend, you're just kind of like, what the fuck is going on with these? Like, why are they so high? And that's what caused a lot of people to miss most of the upside, I think. And it's just because, yeah, it's like, I mean, just like you and your dad are talking about, it's like there's no rhyme or reason anymore. US identifies 50 Russians as target for sanction. There's, look at that. Nice little spike here. This is good for the economy. And then if we go look at the 10-year, 10-year still going up. This is, I mean, this is kind of interesting. Here we go, keep going down. It's just this Bitcoin. Almost back to that weekly VWAP. Close to that gap here. Hidden spot right here through that 79, 77 level. Look at that. 3 times down there on that 89. Only 3, 4, 5 contracts traded. There you go. There they go.
Damn, I got out of that short bread at rock bottom right there.
Nice.
To the tick. This is where it comes like a 40-point flush, and I'm back. Fuck. No, dude, that was clean. That was good.
Yeah, that was a nice easy move down right there. We just broke and
Yeah.
then just went.
Once I actually took that short from 85.
Nice, yeah, that's perfect. That's the perfect entry, yeah.
Yeah. I wanted to take it. I was hoping it would get up to the halfback, and I was like, oh, I'll short it. But I'm like, if it rallies that much, like it's going back up.
Yeah.
I'm definitely not trading when that full talks, dude. That full blows my accounts every time.
So close to the gap. They want it.
When the markets turn red.
I'm looking for the live stream file here. That's not. hilarious. Look at that. Just one tick of that. Remember, they still have a little, the buyers still have support a little bit here at these single prints. Below these single prints, that's when it starts to get really ugly. Our target will become that previous day. Look at the tick here. We don't really see a lot of selling that hangs out below 1,000 like this, unless it's pretty serious. Look at the market here. Getting some selling. The Dow's red. The oh, I don't have the Nasdaq. Oh, it's up. Nasdaq isn't red yet. And the ES red, obviously, we're below the only 10 handles down though. Think about it. The open 94. Oh no. What is it saying? Oh, because it's going based off of Globex. But I think. Fuck is owl. The VIX has popped up here to about 30. DLT is getting clapped though, so good news. And in perspective, right, this push down is not, not something catastrophic. Right, we're still above the balance that we've kind of been sitting in. I mean, still even in the balance. It could be a peek into that upper balance though and a reject. That guy is a savage, dude. That Korean dude that just takes like gigantic losses every single day. The volume coming in on the upside here. We're going to target that 78.50 here, I think. A lot of covering at the top. The 850 has the thinnest volume right. Checks. I got stopped out right there. Just took 2 lots, 66th quarter, 65, up to 70, and then I closed my last one right there, 75. I think we do hit that 78.50, but it started to look like sellers are trying it up here and might get a rotation. I don't want to sit through it. I was wrong apparently because it's just gonna go right up there. Fucker.
You'd be so proud of me, Brad. I haven't made a trade in like 8 minutes. I'm just
Holy
staying
shit.
out. I know. I'm staying out right now. And when Pal talks, I honestly, I'm gonna try not to trade it, but because I don't want to. But if what I said happens, I'm definitely gonna short the top. But we'll see.
I mean, just watch that trend line because don't short above that trend line because that's going to be where you're going to see capitulation from all the hedge funds that have been shorting since January. Look, we come right up to that 78.50 and then boom, there goes the rotation. So they actually did take it up there, and then pushed it back down. Should have been a little bit more patient there, but didn't like. They say Palby walked out on stage with a black eye. They're gonna be falling with a pistol to his temple, and then Jeffrey Epstein will jump out of a cake. Hey, you can't rule anything out. You never know. The world's a crazy place. Whatever happened with Gillian Maxwell? Did she get in trouble? Did she go to jail or?
I won't lie, Brad. I've been talking to myself for 5 minutes.
Oh, did you get muted? It's probably
Yeah.
good. Probably weren't saying anything interesting, anyways.
No, I was gonna tell
I'm
you
just
that
kidding.
whenever I was actually thinking about shorting up there at 78.25 with you.
Oh, I get that's where I closed the long. But yeah,
Oh,
that
you
would have been a
closed
good
long?
short. Yeah.
Dang.
You
I
know
was
how
gonna short it too.
Yeah, that would have been a good short. Yeah, perfect. Would have been like a handoff for me to you. Like, all right, I brought this up here, Jared. Take it down.
Take the ball. Yeah, I actually thought about shorting it. I couldn't convince myself of it, but nah, I should have.
I just have an eye for bounces or like little short covering rallies and kind of just saw it. That's probably why I got pretty quiet because I was focused on getting in. Only 2 lots though, like not a lot of risk there. Daniel Dean. He said Lane has an apartment with HC for a convenient suicide. That's a kind of a interesting comment there. What's HC? Some of the stuff people type on the internet.
Yeah, see what happened with
HC is Hillary Clinton.
Oh,
name is
okay, I get it.
her name is Ghislaine, is how you pronounce it. Ghislaine Maxwell.
Oh, Ghislaine?
Yeah, I've watched a lot of documentaries on her, dude.
Oh, I believe that for sure.
I thought it was Elaine.
Yeah, Ghislaine.
I thought it was Jillianne.
And it was like somebody that knew her. Somebody knew her called her Jelaine.
Well, she's not. What country is she from? That's who you'd have to ask how to say her name. Oh, well, where's Double R? How do you say her name? He probably knows.
Dude, I watched so many documentaries. It's Ghislaine, I swear, because I argued with people about this before. Either way, dude, she is a sick.
Now
sick
I get
person.
it, Daniel.
You know, you get no argument from me there.
Oh, I wish I would have took that short.
There'll be opportunity.
Hey, Brad, you want to know how bad I am? This is how bad I am. Okay. You know how you're always saying like, oh, get a fidget spinner or something, you know?
Yeah.
So you know me, how I have that like gambler mentality. So dude, I downloaded like a slots machine, like whenever I'm bored and like, so I don't enter a trade, I just gamble on this. So I don't feel like I gamble on the market.
That's a good idea.
Yeah.
You could even get, since you're in Vegas, you could probably get like a penny stock, like a legit penny stock machine and just, feed your beast a penny at a time.
Yeah.
Maybe you'll hit a fucking.
And then, yeah, right, dude. I'll have the screwdriver out like 30 minutes later, taking it apart. Like, give my money back.
Because you could probably find, I bet, like a cheap one, like an old one. That'd be cool.
Oh yeah,
Once you guys
at a
move-
lot of like pawn shops and stuff here, you could buy like dollar machines and stuff. But dude, I'd probably lose about $500 before I pull it open.
You're losing it to yourself.
Yeah. Cat, where's the screwdriver? Machine took my money again.
Just about to win the jackpot. Pals in 4 minutes. I'll be right back. I gotta make something to eat real quick. I'm gonna die if I don't. Give me 4 minutes. I'll be back. All right, I'm back. The only thing that's looking green right now is financials here, guys. That's it. Nothing else. And we're down off of that report coming out, the 07, almost 50 handles.
Are you just gonna watch Powell on your computer, Brett, or are you gonna watch him on TV?
No, I'm going to watch him on my computer. I'm pulling him up right here. I'm waiting for him to come on. Oh, Gillane. Is that how you said it, Jared? Gillane?
Ghislaine.
Oh, Gillane. Okay, okay. I don't know why I pronounce G-I-L as Jill.
Yeah.
Maybe that's the
Ghislaine.
Spanish.
Like cardio? What is that, Spanish?
Yeah. He's not on yet. Al's never late, guys. Oh, here he comes. Hang on.
Certain. At the Federal Reserve, we are strongly committed to achieving the monetary policy goals that Congress has given us: maximum employment and price stability. Today, in support of these goals,
can you guys hear him?
The FOMC raised
yeah, that is a lot of
interest rate
singles,
by
Tommy.
1/4 percentage point.
Good chance that we trade back into a couple of
very
those at
strong,
least.
And against the backdrop of an extremely tight labor market and high inflation, the committee anticipates that ongoing increases in the target range for the federal funds rate
Daniel, most were saying
will be appropriate. In addition, we expect to begin reducing the size of our balance sheet at a coming meeting. Economic activity expanded at a robust 5.5% pace last year, reflecting progress on vaccinations and the reopening of the economy, fiscal and monetary policy support, and the healthy financial positions of households and businesses. The rapid spread of the Omicron variant led to some slowing in economic activity early this year, but cases have declined sharply since mid-January, and the slowdown seems to have been mild and brief. Although the invasion of Ukraine and related events represent a downside risk to the outlook for economic activity, FOMC participants continue to foresee solid growth.
Back into
As
those
shown
single
in
prints.
our summary of economic projections, the median projection for real GDP growth stands at 2.8% this year, 2.2% next year, and 2% in 2024. The labor market has continued to strengthen and is extremely tight. Over the first 2 months of the year, employment rose by more than 1 million jobs. In February, the unemployment rate hit a post-pandemic low of 3.8%, a bit below the median of committee participants' estimates of its longer-run normal level. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand is very strong, and while labor force participation has increased somewhat, labor supply remains subdued. As a result, employers are having difficulties filling job
through
openings,
those single prints
and
here.
wages are rising at their fastest
Fill them
pace in
in.
many years.
One tick below.
FOMC participants expect the labor market to remain strong, with the median
His voice is so
projection for
calming,
the
yeah.
unemployment rate declining to 3.5% by the end of this year and remaining near that level thereafter.
He definitely knows what
Inflation
he's doing.
remains
That's
well
for sure.
above our longer-run goal of 2%. Aggregate demand is strong, and bottlenecks and supply constraints are limiting how quickly production can respond. These supply disruptions have been larger and longer lasting than anticipated, exacerbated by waves of the virus here and abroad, and price pressures have spread to a broader range of goods and services. Additionally, higher energy prices are driving up overall inflation. The surge in prices of crude oil and other commodities that resulted from Russia's invasion of Ukraine will put additional upward pressure on near-term inflation here
Look
at
at
home.
these moves here. This thing just went from
We
42 to
understand
48
that high
in less than
inflation
a
imposes
second.
significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. We know that the best thing we can do to support a strong labor market is to promote a long expansion, and that is only possible in an environment of price stability.
Bitcoin not
As
getting
we
beat up too
emphasize
bad
in our
here.
policy statement, with appropriate firming in the stance of monetary policy, we expect inflation to return to 2% while the labor market remains strong. That said, inflation is likely to take longer to return to our price stability goal than previously expected. The median inflation projection of FOMC participants is 4.3% this year and falls to 2.7% next year and 2.3% in 2024. This trajectory is notably higher than projected in December, and participants continue to see risks as weighted to the upside. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. Our policy has been adapting to the evolving economic environment, and it will continue to do so. As I noted, the committee raised the target range for the federal funds rate by 1/4 percentage point and anticipates that ongoing increases in the target range will be appropriate. The median projection for the appropriate level of the federal funds rate is 1.9% at the end of this year, a full percentage point higher than projected in December. Over the following 2 years, the median projection is 2.8%, somewhat higher than the median estimate of its longer-run value. Of course, these projections do not represent a committee decision or plan, and no one knows with any certainty where the economy will be a year or more from now.
Pretty quick move off that low there.
Reducing the size of our balance sheet will also play an important role in firming the stance of monetary policy. At our meeting that wrapped up today, the committee made good progress on a plan for reducing our securities holdings, and we expect to announce the beginning of balance sheet reduction at a coming meeting. In making decisions about interest rates and the balance sheet, we will be mindful of the broader context in markets and in the economy, and we will use our tools to support financial and macroeconomic stability. As we noted in our policy
Let's see how far we can eat into these singles.
Russia's invasion of Ukraine for the U.S. economy are highly uncertain. In addition to the direct effects from higher global oil and commodity prices, the invasion and related events may restrain economic activity abroad and further disrupt supply chains, which would create spillovers to the U.S. economy through trade and other channels. The volatility in the financial markets, particularly if sustained, could also act to tighten credit conditions and affect the real economy. Making appropriate monetary policy in this environment requires a recognition that the economy often evolves in unexpected ways. We will need to be nimble in responding to incoming data and the evolving outlook. And we will strive to avoid adding uncertainty to what is already an extraordinarily challenging and uncertain moment. We are attentive to the risks of potential further upward pressure on inflation and inflation expectations. The committee is determined to take the measures necessary to restore price stability.
Buyers buying that 54
The American
again.
economy is very strong and well positioned to handle tighter monetary policy. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. Let's go to Gina at the New York Times.
Hi, Chair Powell. Thank you so much for taking our questions.
Buyers are holding on the 60 quarter here. Look for a move.
About
They're eating into some of these singles.
The risks of going too fast and potentially tipping the economy into recession, and how you're weighing those risks against the possibility of going too slowly, allowing inflation to become embedded and kind of getting behind the curve.
So I guess I would start by saying that, in my view, the probability of a recession within the next year is not particularly elevated. And why do I say that?
Target that 74.
Strong, and most forecasters expect it to
Maybe
remain
that
so.
78
if you look
again.
at the labor market,
But
also very
74,
strong.
50 has a low
Conditions are
volume
tight,
on
and
it.
payroll job growth is continuing at very high levels. Household
Right here,
and business balance sheets
541.
are strong. And so all signs are that this is a strong economy, indeed one that will be able to flourish, not to say withstand, but
There's
certainly
10 points right there.
flourish as well.
So if you took a breakout
in the face
off those
of
K,
less
off that K
accommodating
high into
monetary
those
policy.
singles,
So
you're up about 10
I
points
guess
here.
that's
You might want
how I
to,
would say I'm looking at that. Of course,
you know,
the
look
objective
for
is to
profit.
achieve price stability while also sustaining a strong labor market, and that is our overall objective. But we do feel the economy is very strong and well positioned to withstand tighter monetary policy.
Thank you. Let's go to Howard at Reuters.
Hi, Chair Powell. I was wondering, in the SEPs, you have quite a markdown to GDP from 4 to 2.8%. I'm wondering how much of that do you feel is a result of the Fed's stiffer than expected action here? You talk about monetary policy operating with a lag, but is this going to
oh, what the fuck happened?
bite quicker than expected?
I don't think that's a big piece of it, actually. I think some of that is just an early assessment of the effects of spillovers from the war in Eastern Europe, which will hit our economy through a number of channels, highly uncertain. But you know, you're looking at higher oil prices, higher commodity prices. It'll be so that we think that will weigh on GP to some extent. So that's part of what moved those assessments down. I think generally monetary policy works with a lag, so some of that would also be in there. But remember as well that 2.8% is still very strong growth. If we think that the potential growth rate of the economy is somewhere around 1.75%, 2.8%. is strong economic growth. It would have been one of the strongest years, in fact, of the last expansion. So while it's lower than last year's 5.8%, it's still quite strong growth. So I would say it's quite a strong forecast.
So in that context, what would trigger you to go faster or slower on the rate hikes? Ongoing increases doesn't really tell us whether this is going to come in bigger chunks or evenly paced through the year.
Yeah, so you know the way we're thinking about this is that every meeting is a live meeting, and we're going to be looking at evolving conditions, and if we do conclude that it would be appropriate to move more
almost
quickly
back up to that
remove
78,
accommodation, then we'll do so. I can't be perfectly specific about it, but that's certainly a
liquidation
possibility
there
as we go through the year.
Thank you.
Thank you. Let's go to Rachel at the Washington Post.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm curious if you can be specific on when you expect to see inflation will start to come down, especially with the combination of rates going up, fiscal aid dissipating from the economy, and supply chains getting better. And if you don't start to see that, how will you signal it? What will you be looking for, and what will you be looking for over the course of the year? Thank you.
Up almost a full percent.
So
S&P
I guess
lagging
I would say
here.
that at the before the invasion of Ukraine by Russia.
The Dow's up. Well, the Dow and the ES are similar, but the Nasdaq's up a full percent. The Russell's up a full
sometime in the
percent.
first quarter, maybe the end of the first quarter of this year, and
There we go.
and then maybe stay at that level or a little bit lower, and start to come down in the back half of the year. So now we're
Mechanical
getting,
selling.
we're already seeing a little bit of short-term upward pressure in inflation due to higher oil prices.
Oh, what a rally.
Not natural gas
My
a little bit, but
God.
not so much for us since we have our own natural gas supply, other commodities prices. The other thing is that you're seeing supply chain issues around shipping and around, lots of countries and companies and people not wanting to touch Russian goods. So that's going to be more tangled supply chains. So that could actually push out
Hey, Brad, I'm going to hop
the
off.
relief we were expecting
All right,
on supply
later.
chains generally.
Oh, wait a
So
minute.
I guess I would say that the expectation is still that inflation will begin to come down in the second half of the year. But if you look at where I read the SEP headline median, we still expect inflation to be high this year, lower than last year. And then we expect, though, particularly with the effects of the war, but also the data we've seen so far this year, we expect inflation to remain high through the middle of the year, begin to come down, and then come down more sharply next year.
Let's go to Nick at the
Notice
Wall
how
Street
when
Journal.
he responds to most of the questions, one of the questions he responds to positively and then negatively.
Over the last 6 months, the
The next
Fed
one.
has shifted its policy stance quite a bit. 6 months ago, you were still buying assets. Most officials weren't projecting any interest rate increases this year. And yet, despite the shift over the last 6 months, real rates are as negative today as they were then. So how concerned are you that further inflation surprises will offset the effects of recent policy firming by leading real rates to stay at levels that do not actually provide much restraint to the economy? Thanks.
So that's one of many ways of capturing the situation, which is that the committee really does understand that the time for rate increases and for shrinking the balance sheet has come. And I would just say, I would go back to the economy is very strong. As I mentioned, tremendous momentum in the labor market. We expect growth to continue. It's clearly time to raise interest rates and begin the balance sheet shrinkage. And I just wanted to say that as I looked around the table at today's meeting, I saw a committee that's acutely aware of the need to return the economy to price stability and determined to use our tools to do exactly that. You couched it in terms of real rates. I would say, if you look at the SEP, you've got people getting close to or even above, in many cases, their estimate of the longer run neutral rate. So I understand that doesn't do it for real rates, but if you go out a year or two, many people are in their forecasts are having tight policy from a real interest rate standpoint. So that's something that we're focused on. Of course, it's a highly uncertain environment, and you know, we don't know what's going to happen, but we do know that we're going to deploy our tools to achieve our goals, and that includes the price stability goal.
Let's go to Victoria at Politico.
Hi, Chair Powell. So looking at the summary of economic projections, you all have inflation coming down over the course of the year to 4.3%. And then you also have rates going up to what appears to still be below roughly what would be estimated to be the neutral rate, although I know that's a little bit uncertain. So I was just wondering, how much of inflation coming down do you see as actually being as a result of the Fed itself raising rates?
There they go. They fill those singles.
Given that Sarah Bloom-Raskin withdrew her nomination, what do you expect to do with the regulatory portfolio? Do you expect to assign a governor in charge of that?
Okay. So sorry. Tell me again your first question.
My first question is, how much do you expect inflation to come down as a direct result of the Fed's actions?
Good volume coming in up here, guys.
So part of inflation coming down at the very beginning is clearly to do
They backfilled a little bit.
factors other
See if
than
they
our policy,
backfill
and
this.
those would
I keep
include
trying to bring it
potentially
up.
supply chains getting a little bit better.
Remember,
Certainly
we have
base
that
effects. You're
pretty mechanical
lapping,
level
as you know, when you
up
look
here
at a 12-month trailing window, you're lapping very high inflation
on that
in March,
15.
April, May, June of last year. So there should be some
I
effects
think
from
that's
that
where they
in
try to target to repair
in
that.
a 12-month picture. Really, what we're looking for though is month-by-month inflation coming down, and so it's really it's all the things we've been talking about. You know, that really haven't helped much, including the shift away from goods and back to services, including supply chains getting better, including labor force participation, all those things that have been sticky and not happening. But a big part of it is the base effects I mentioned as well. You know, I think monetary policy starts to bite on inflation and on growth with a lag, of course. And so you would see that more in 23 and 24. But also remember, we started talking about rate increases last year. For some months now, the financial conditions have already incorporated a significant number of rate increases. So
What's
it
up,
doesn't
man?
start today. In effect, the moves are already priced into the market for a few months now. So so the clock is running on that, and I think some of that will be seen in the second half of the year as well.
He's talking right there. He's talking about.
And on the regulatory portfolio. So, I would just say this, you know, we have an obligation to carry out
that we
under
were
the
talking
law
about.
in supervision
The
and
yield curve
regulation,
moving up.
and we're doing that. That's what we're doing. The committee is not active, so what's happening is things are coming to the full board, and we're voting on them. We're getting our business done. You know, we got the stress tests done. We've looked at a number of proposals for mergers and things like that. So we're working ahead. Of course, we don't have a vice chair for supervision, as you mentioned, but we're making do with the situation we have, and a good number of things have come straight to the board for approval.
Let's go to Neil Irwin at Axios.
Kind of scary here.
Let's go
Get
to Neil
TLT.
Irwin.
Hi, Chair Powell.
Starting to
It's,
turn
Neil Irwin
around.
at Axios. Thanks for taking our questions. In the
That's not
statement
good
of
for the
economic
upside of the
projections,
market here.
We see a forecast of median 1.9% Fed fund rate at the end of the year, 2.8 end of next year. Wondered whether that aligns with your own expectations, in particular on that point of overshooting the long-term neutral rate. And also, if you can tell us anything about how that might be paced, front-loaded, back-loaded, how high is the bar for doing 50 at one meeting?
So I don't, Neil. I've never talked about my own SCP projection. It's in there, but I think Fed chairs have generally not done that because we just haven't done it. It's because we have to put together the consensus on the committee and present that consensus. So I wouldn't talk about my individual one. And in terms of the pacing of it, I would just point out that there's 7 remaining meetings this year. This isn't something we discuss or debate or agree on, but there's 7 remaining meetings and there's 7 rate hikes. I would add there's also the shrinkage of the balance sheet, which people do the math different ways, but that might be the equivalent of another rate increase just from the runoff of the balance sheet. So I don't know. We haven't made any decisions on front end.
It's kind of a hawkish statement.
Or going steadily through the year. And as I mentioned, if you look at the SEP, a good number of participants.
Take a peek at the breadth real quick, guys. Look at the breadth. It's still positive, even though we're below the open.
I can't give you. I'm not going to try to give you a really specific test for what it would take.
There's some
to do
people
that,
buying. Look at the tick.
I will say this though: we'll be looking at the data as they come in. We'll be looking to see whether the data show expected improvement on inflation. We'll be looking at the inflation outlook and making a judgment. And we'll be going, each meeting is a live meeting. And if we conclude that it would be appropriate to raise interest rates more quickly, then we'll do so.
So he's leaving it open, saying, there it goes. They're reacting to that. He's saying, if I feel like smacking the hammer down, I will, if the market's ready for it. What the fuck? What the fuck? Why is it not playing, dude? The News Squawk's putting out that
moment
that they are having issues with the streaming sound, at least. I don't want to listen to whatever this. I'm gonna get clapped for some bullshit ad.
Beside the churn that
There
I'm
we go.
seeing
We're back.
is what so many people are writing about, and you nailed this up top of the hour with the release. This was a snooze, but it wasn't. And the wasn't is the dot plots. And I believe I hear Mr. Powell suggesting they're sort of making up the dot plots as they go.
So the team in the control room, Tom, are going to work through this, and when we've established a connection back with the Fed, we'll drop back in.
Can you guys hear it?
Let's take a listen.
But CPI inflation was as high as it was July of 1981, when the effective federal funds rate was 19.2%. But given the current data, how far behind the curve of inflation do you believe the Federal Reserve is in your mind?
So I just would say a couple of things. We have the tools that we need, and we're going to use them. And as you can see, we have a plan over the course of this year to raise interest rates steadily and also to run off the balance sheet. We will take the necessary steps to ensure that high inflation does not become entrenched while also supporting a strong labor market. And as I mentioned, if we conclude that it would be appropriate to move more quickly, we'll do so. I'll leave it to others to make the judgment you ask for.
Oh my.
And then just as a follow on that, I wanted to get you on the record on this. What impact has there been on your job, given the fact that you...
What the fuck?
I lost you in the middle of the question.
Edward, can you repeat that question?
Nasdaq's almost up 2%. Russell's almost up 2%. ES about 8. The Dow is still only about 1/4% up.
Not actually confirmed. Has there been any impact on
VIX is getting clapped down at 27.
BLT
BLT is going green though. That's not
None
great.
whatsoever.
Nvidia is still looking strong. Facebook's looking pretty strong today. Tesla as well.
Okay, let's go to Colby Smith at the FT.
Thank you, Michelle. Chair Powell, how concerned is the committee about the notable pickup in services inflation, which is perhaps less likely to self-correct? And to what extent does it alter both the committee's confidence that long-term inflation expectations will not de-anchor in the coming months, as well as the balance of risks that the Fed may need to raise interest rates further above neutral than indicated in the dot plot? Thank you.
Thank you. So, of course, that's something we're watching report by report, and we noticed it in the last meeting. And
Mechanical buying off the open there.
We have expected services inflation to move back up to where it was, and that's part of what's happening. Is in the case of some services,
again,
prices are still getting back up to where they were before the crisis. In other cases, it's pretty clear that inflation has spread more broadly across services, and yes, that is concerning. In the meanwhile, we see some progress on the goods side, but really in this latest report, it was confined to vehicles, which is admittedly a large large category. So, as I mentioned, the committee acutely feels its obligation to move to make sure that we restore price stability, and is determined to use its tools to do so.
Thank you. Let's go to Steve Leisman at CNBC.
Thank you. Mr. Chairman, I wonder if you could help me understand the kind of logic, if there is one, inside the SCP here. As I look at the median forecast, for example, for unemployment, it runs for the 3-year window below the long run rate. I look at inflation being above over the 3-year window, the long run, or call it the neutral rate, so the economy still runs hot.
This is mostly just short covering here. It's a really big rally.
The funds rate above the long run rate.
But
my question is
there's not really a lot of selling happening. Nothing hitting the nothing hitting the bid at least.
Continuing to run further behind the curve and never really get in front of inflation because the economy will continue to run hot. And kind of on a related issue, you
well, what does this look like, right? Looks like a check down into that previous level.
To return to price stability.
Looks really similar.
Expected. Isn't that a choice you're making? And if so, why are you making that choice to let inflation run above price stability longer than you'd like?
Right. So if you look, first of all, there is no. You're looking at medians, but understand that there's no. It's not something we voted on. It's not a plan. But if you look, people do have their by the end of this year, broadly, people are at or close to, or in some cases above, their estimates of longer run neutral interest rate. Okay, so that should stop.
There's that 4,300 again. They're fighting right over it.
That should be removed.
All the volume coming in right there.
Policy, basically. At the same time, we will have done significant balance sheet runoff, and you can think of that as further. In the next year, and just looking at the median, you're now above above the what people estimate to be the longer run median. So and also in many people's forecasts, that actually amounts to tight policy in real rates as well. So why does unemployment remain at 3.5%? I mean, a couple points. One is the connection between in the economy we had before the pandemic, the connection between inflation and the level of the unemployment rate was not very tight. But this is clearly what this is an expectation that really it amounts to the idea that wage increases, which are now running above the level that would be consistent over the long run with 2% inflation, will move back down to levels which are still very attractive, full economy full employment kind of wages, but not to a point where they're pushing up inflation anymore. And as I mentioned, there are a lot of factors causing inflation to come down. And the reality is there are many moving pieces, and we don't know what will actually happen. But no matter what happens, this is a committee that is determined to use its tools to make sure that higher inflation does not become entrenched. And so we are determined on that front, and we'll deal with what comes. This is a modal or most likely expectation, but we'll deal with what comes, whether it's better or worse.
Thank you. Let's go to Chris Rugaber at the AP.
Hi, thank you. Well, let me follow up a bit on that. I mean, there are a lot of economists skeptical that you can reduce inflation as much as you've penciled in without raising the unemployment rate. And I'm wondering just what are the mechanisms you see in reducing demand? I mean, outside housing and autos, how do higher Fed rates reduce consumer demand unless it's through higher unemployment? Thank you.
Well, if you take a look at today's labor market, what you have is 1.7 plus job openings for every unemployed person. So that's a very, very tight labor market, tight to an unhealthy level, I would say. So, in principle, if let's say
if they can hold it above the open, can't hold it above the open,
and the idea
might
is we're
get
trying
some
to
more
better
downside here.
align demand and supply. Let's just say in the labor market. So it would actually, if you were just moving down the number of job openings so that they were more like 1-to-1, you would have less upward pressure on wages.
L period opens
you would have
up.
a lot less of a labor shortage, which is going on pretty much across the economy. We're hearing
Little
from
peak below the
companies
open
that
there.
They can't hire enough people. They're having a hard time hiring. So that's
Doing a little bit of
really
backfilling.
the
Oops,
thinking there
guys.
is these
Hold on
are
here.
fairly well understood channels, interest sensitive, and basically across the economy, we'd like to slow demand so that it's better aligned with supply, give supply at the same time to recover, and get into a better, a better alignment of supply and demand, and that over time should bring inflation down. And I'll say again, though, we don't
Holding
have
it below the open.
a perfect crystal ball about the future, and we're prepared to use our tools as needed to restore price stability. With as I mentioned in my opening remarks, without price stability, you really can't have a sustained period of
No
maximum
flush there.
employment. It's one of our most fundamental obligations is to maintain and
There
restore.
they go.
In this
They keep
case,
hammering
price
it down
stability.
below this
So we're very
open.
committed to that. Of course, the plan is to restore price stability while also sustaining a strong labor market. That is our intention, and we believe we can do that. But we have to restore price stability.
Okay, let's go to Scott Horsley at NPR.
They can break that 90. There's really thin volume back down at that 80,
Thanks.
79
I
level.
apologize if this covers some of the same ground you
See
just,
right
you
here,
just talked
600.
about, Mr. Chairman. I think I missed some of your answer there, but I have a follow-up question on the labor force. We have seen some gains in the prime age workforce in the last few months. I wonder what you anticipate when it comes to some of the older workers as the health outlook has changed. Are we going to see more recent retirees following Tom Brady back in the workforce? And what would that mean for wages and inflation?
It's hard to say.
So there they go. There's a little bit of
in the last cycle
Another
was that
short cover
over the
in there.
course of a long, steady expansion, labor force participation outperformed expectations. And that was just it was a tight labor market, but it was nowhere near as tight as this labor
trap
market,
shorts
but it was
down
a tight
there
labor
at
market.
the 87.
And so people stayed in the labor force longer.
Looks like.
It wasn't so much people coming back in the labor force after retirement. That's not something that happens in the aggregate very much. But so that's what was happening. And, more labor force participation is tremendously welcome. And of course, our policy does not in any way preclude that. This is a situation where wages have moved up at the highest rate in a very long time. And people are able to quit their jobs and move to better paying jobs in the same industry or different industry. So it's a really attractive labor market for people. And once, as we get past COVID, well and truly, it becomes an even more attractive one. So we hope that will lead to more labor supply. That's a good thing for the country. It's a good thing for people. And it also will, we think, help relieve some of the wage pressures.
So 4,300. Oh, reached my limit of watching for free. That's a fair.
Yield curve has flattened a lot, and even further this today, dollar's up. Is that welcome? And would you like to see more in order to achieve your goals? Thank you.
So as you know, policy works through financial conditions. That's how it reaches the real economy, by just the mechanisms you mentioned. And remember that the financial conditions we had for the last couple of years were a function not only of very aggressive and appropriately so fiscal policy, but also highly accommodative monetary policy. The monetary policy settings that we put in place at the worst parts of the pandemic. So it is very appropriate to move away from those. And yes, that will lead to some tightening in financial conditions in the form of higher interest rates and just the sorts of things. We're not targeting any one or more of those things, but
all right, Jamie, we'll see you later.
Generally should move to a more normal level, so that because we know the economy no longer needs or wants these very highly accommodative this stance, which, so it's time to move to a more normal setting of financial conditions, and we do that by moving monetary policy itself to more normal levels.
When you say move to a more normal setting for financial conditions, that suggests to me that you want financial conditions to tighten further from where we are now. Am I drawing the right inference from that?
Well, yes. So I would say we look at a broad range of financial conditions, and of course, when we tighten monetary policy, we do expect that they will adjust in sync over time with monetary policy. It's not any particular financial condition, but a broad range of financial conditions. They will reflect, to some extent, they reflect any number of things. But yes, we need our policy to transmit to the real economy, and it does so through financial conditions, which means as we tighten policy or remove accommodation so that it's at least less accommodative, that broader financial conditions will also be less accommodative.
Thank you. Just a little housekeeping note. Those of you in this call may be having some tech issues. If so, I understand the broadcast is coming through clearly on www.federalreserve.gov. So you might go there for the audio. And now we'll go to Gene Young.
Hi, Chair Powell. I wanted to
Did I
ask
lose the
about
open
the
again
balance
there?
sheet discussion you've had at this meeting. Can you give us any more details? Did you discuss whether to cap runoffs or whether to increase those caps over what period, if there were any details?
Yes, thank you for asking. So at our meeting today and yesterday, we made excellent progress toward agreeing on the parameters of a plan to shrink the balance sheet. And I'd say we're now in a position to finalize and implement that plan so that we're actually beginning runoff at a coming meeting, and that could come as soon as our next meeting in May. That's not a decision that we've made, but I would say that that's how well our discussions went in the last 2 days. So a couple things just to add. We'll be mindful of the broader financial and economic context when we make the decision on timing, and we always want to use our tools to support macroeconomic and financial stability. We want to avoid adding uncertainty to what's a highly uncertain situation already. So all of that will go into the thinking of the timing around this. In terms of I would say this. I don't want to get too much into the details because we're literally just finalizing them. But the framework is going to look very familiar to people who are familiar with the last time we did this. But it'll be faster than the last time, and of course it's much sooner in the cycle than last time. But it will look familiar to you, and I would also say that there'll be I'm sure there'll be a more detailed discussion of our in the minutes to our meeting that come out in 3 weeks, where I expect that it will lay out pretty much the parameters of what we're looking at, which I think will look quite familiar.
Thank you. Let's go to Michael McKee at Bloomberg TV.
Mr. Chairman, since September of 2020, you've been operating on a monetary policy framework that let the economy run hot to bring unemployment down. That seems to be over, but I'm wondering how you would describe your reaction function now. What is it that the Fed is trying to do other than bring inflation down? In other words, is it we're going to keep raising rates until it comes down to an acceptable level?
Yeah, so I want to clear one thing up again, and that is that nothing in our new framework or in the changes that we made has caused us to wait longer to raise interest rates. What we said in the framework changes was, and this was really a reflection of what had happened for the preceding couple of decades, actually. What we said was, if we see low unemployment, high employment, but we don't see inflation, then we're not going to raise rates till we actually see inflation. That's what we said, and that was the sense of it. There was no sense in which if we got a burst of really high inflation,
Little ping pong back and forth here between the 4,300 and the open.
In fact, quite the contrary. The framework is all about anchoring inflation expectations at 2%. So I do hear this, that the framework, we can't blame the framework. It was a sudden, unexpected burst of inflation. And then it was the reaction to it, and it was what it was. But it was not in any way caused by or related to the framework. So come to today. I think our vision on this on the committee is very, very clear. What we see is a strong labor market. We see a labor market with a lot of momentum, great job creation, and we see the underlying economy strong. Balance sheets are strong. Yes, there are threats to growth from what's going on in Eastern Europe, but nonetheless, in the base case, there's a pretty broad expectation of strong growth. But inflation is far above our target, and the help we've been expecting and other forecasters have been expecting.
What happened to C-130? He just decided he didn't want to be on the stream anymore. Kind of just
bottlenecks.
He's still around. He's still in the Discord and stuff. Still trades.
And so we're looking now to using our tools to restore price stability.
So we kind of know where they're playing. The mechanical sellers are buying the open, selling that 4,300 back and forth. So if we get above there,
continue to see it
and starts to go. Remember, I still think that target is the 15 up here.
If I could follow up by asking, I guess what you'd call it is the Paul Volcker question. You don't think unemployment is going to rise significantly, but if it does that temper your desire to keep raising rates?
Well, the goal, of course, is to restore price stability while also sustaining a strong labor market. We have a dual mandate, and they're sort of equal. But as I said earlier, price stability is an essential goal. In fact, it's a precondition, really, for achieving the kind of labor market that we want, which is a strong and sustained labor market. We saw the benefits of a long expansion, a sustained labor market. It pulled people back in, and there were really no imbalances in the economy that threatened the long expansion. The pandemic arrived. It was just a completely exogenous event. So that's how we're thinking about it. We of course want to achieve price stability with a strong labor market, but we do understand also that really you can't have maximum employment for any sustained period without price stability. So we need to focus on price stability, in particularly because the labor market is so strong and the economy is so strong. We feel like the economy can handle tighter monetary policy.
Thank you. Let's go to Brian Chung at Yahoo.
Chairman Powell, hopefully no tech issues here on this front. Wanted to ask just kind of the broad question about how you are communicating what the Fed's doing here today to the average American who might not be reading the dot plots or understanding what the SCP is. How is the 25 basis point hike today and then the signaling on future Fed policy going to address the inflation that they're feeling at the stores on a daily basis?
Sure. So I guess I'd start by just assuring everyone that we're fully committed to bringing inflation back down and also sustaining the economic expansion. We do understand that these higher prices, no matter what the source, have real effects on people's well-being. And really, high inflation takes a toll on everyone, but it's really especially on people who use most of their income to buy essentials like food, housing, and transportation, where I mean, we've all seen charts that show if you're a middle-income person, you've got room to absorb some inflation. If you're at the lower end of the income spectrum, it's very hard because you're spending most of your money already on necessities, and the price is going up. So, but it's punishing for everyone. So it has been a difficult time for the economy, but we do anticipate that inflation will move back down, as I mentioned earlier. It may take longer than we like, but I'm confident that we'll use our tools to bring inflation down. And you ask about rates. So the way that works, I would explain, is as we raise interest rates, that should gradually slow down demand for the interest-sensitive parts of the economy. And so what we would see is demand slowing down, but just enough so that it's better matched with supply, and that will bring inflation down over time. That's our plan.
Thank you. Let's go to Jolene Kent at NBC News.
Hi, Chair Powell. Thank you so much for taking my question, doing this today. My question is a follow-up to what Brian just asked. What is your message to consumers out there who can no longer afford the basics due to this high inflation?
Well, that is, yes, indeed. I mean, as I just said, I think we do understand very much.
This is an important question right here.
That it's our obligation to restore price stability, and we've had price stability for a very long time, and maybe come to take it for granted. But now we see the pain. I'm old enough to remember what very high inflation was like, and we're strongly committed as a committee to not allowing this higher inflation to become entrenched, and to use our tools to bring inflation back down to more normal levels, which our target.
I don't know, Clipper.
Is
I don't know if there's really much
we will do
significance with that.
And
the correlation. I mean, if you look at the chart itself,
but the way we
really
do that is by raising interest rates and by shrinking our balance sheet, and so financial conditions will become.
It kind of just looks like the ES
at the margin less supportive
trading
of
together,
various
really.
kinds of economic activity.
It's
that
tough
will slow
because
the economy,
there's a
while also
24-hour
allowing the
market
labor market to
compared.
remain very
Right,
strong.
we
And
see,
the good news is the economy and the labor market are quite strong, and that means the economy, we think, can handle.
Yeah, Bitcoin futures are actually below the open today.
A quick follow-up to that, obviously the Federal Reserve
But they're
walking
up
this very
from
complicated
last night
fine
too,
line,
so.
Trying to avoid a recession. For the consumers out there who are worried about their jobs and a possible recession, what do you say to that?
Well, I say that our intention is to bring inflation back down to 2% while still sustaining a strong labor market, and that the economy is very strong. If you look at where forecasts are, people are forecasting growth that's strong within the context of U.S. potential economic output. And we expect that to continue. And to the extent the data come in different, then of course our policy will adapt. But we do believe that our policy is the appropriate one for this forecast, and we believe that we can bring down inflation. We believe that we can do so while sustaining a strong labor market. The labor market it's not strong in the ordinary sense of the world. We have not seen a labor market where there are 1.7 job openings for every unemployed person, or where if you add job openings to those who are employed, that's actually substantially a larger number than the size of the workforce, than the number of people who actually count themselves as in the workforce. So this is a situation where demand is higher than supply. And when
They're starting to build value above the 4,300 now.
So we need to use our tools to move supply and demand back. And we don't think we need to do this alone. There will be other factors helping that happen. But we certainly are prepared to use our tools, and we will.
Thank you.
Thank you. Let's go to Simon at The Economist.
Thank you, Michelle. Thank you, Chair Powell. Sorry to take you away from inflation for 1 minute. May I ask about the sanctions on Russia, and specifically the freezing of the central bank assets? Of course, that raises a similar risk for other sovereigns around the world and their biggest companies potentially. Any concerns about, in the long term, how this might affect the dollar's status as the preeminent global reserve currency? And in the past couple of weeks, have you had to deliver any kinds of reassurance to other central bankers around the world?
Well, so of course, central bankers around the world are generally very in favor of all of these sanctions. But let me say this: sanctions are really the business of the elected government, and that's true everywhere. So, the administration and the Treasury Department in particular, and other agencies, they create these sanctions. We're there to provide technical expertise, but they're not. It's
Back
not
to
our
that thin spot, that
decisions.
09.
About so I'm reluctant to
09 to
comment
12,
on sanctions really much because again they're not for us. We have a very specific mandate, and these are really the province of elected governments, as I mentioned. So I'd have to leave it at that. So, sorry.
Thank you. Let's go to Nancy Marshall-Genzer at Marketplace.
Hi, Chair Powell. Thanks for taking the question. You've been talking a lot about rising wages, which on the one hand is a great thing, but are we possibly seeing the beginning of a wage price spiral?
So the way I would say it is this: we first of all, I would agree with the premise that wages moving up is a great thing. You know, that's how the standard of living rises over time, and it generally
Watch for a pullback here. If it pulls back to this low volume and rejects, that might be a decent opportunity if you're not in.
What we
Back at
have
that
now,
15 level, it's a big takeoff level from earlier.
We look at
Where the target up is
we're blessed
4,400.
with a range
That's
of
that,
measures of wages that all measure different
that,
things. But right now, they're
you know,
all showing the same thing, which is that the
1
increases, not the level,
percentage
but the
move.
increases
We pretty much
are
hit
running at
a
levels
move to the downside,
well
that 42.
what would be consistent with 2% inflation
Brad, can
you
turn his voice
over time.
down just a little bit?
And that may be, we don't know how persistent that phenomenon will be. It's very hard to say. And that's really, I think, the sense of your question about a wage price spiral is
about now. Is that better?
Something that's going to start happening and become entrenched in the system. We don't see that.
Now, what?
You can
What did
see,
you say
for example,
a little bit ago?
So it's saying right here, if you haven't got in yet, if it comes back down to this level and bounces right out, it's telling you rejection of these lower prices. And now that we're back above this 15, if people keep buying it, that target is still going to be 4,400 for the buyers. As a, you know, they're looking to trade out of this downtrend, right? The downtrend that we've been looking at on here.
Wages moving up in ways that they're not.
At 44, I mean, this thing 4,400 is pretty much would take them on the other side of that. That's where they're kind of looking to hammer price up to.
Inflation back down to 2%. And that would be in the context of an extraordinarily
the VIX is dropping hard. It's down 10%, 26. TLTs. TLTs up. Apple's up.
Economy can as well. But yes, wages are moving up faster than is consistent with 2% inflation. But it's good to see them moving up. But it wouldn't be sustainable over too long of a period to see them moving up that much higher. And that's because of this misalignment between supply and demand. We expect to get more labor supply.
The White House just put out that
than we expected
they can put out worse sanctions on Russia here
than expected. So it's not easy to predict these things. But we do expect that we'll get people coming back in the labor market, particularly as COVID becomes less and less of a factor in many people's lives, something we all wish. So that's how we.
That G high is mechanical.
Thank you. And for the last question, we'll go to Don Lee at LA Times.
Hi, Chair Powell. I think you said to the Senate earlier this month that in hindsight, the Fed should have moved earlier. And it sounds like today that you don't think that the Fed is late. And I just wanted to get your
The volume starting to increase, 16% increase here.
If you still think that the Fed is behind the curve, how much behind the curve is it?
Right. So we are not. We don't have the luxury of 20/20 hindsight in actually implementing real-time decisions in the world. So, the question is, the right question is, did you make the right decisions based on what you knew at the time? But that's not the question I was answering, which is knowing what you know now. So I think if we knew now, of course, if we knew now that these supply blockages and the inflation resulting from them in collision with very strong demand, if we knew that was what was going to happen, then in hindsight, yes, it would have been appropriate to move earlier. Obviously, it would be, but again, we don't have that luxury. And then, but that's a separate question from,
It doesn't matter.
Your other question,
It
which
doesn't
is
matter when we come.
behind the curve. And I don't have the luxury of looking at it that way. You know, we have our tools.
You said ETH's looking to break out?
And the committee is very focused on using them. We're acutely aware of the need to restore price
ETH does look like it wants to break out.
while keeping a strong labor market. And what I saw today was
ETH is in this little downtrend as well, off the highs.
To achieving price stability, in particular, and prepared to use our tools to do that. We're not going to let high inflation become entrenched. The costs of
ETH a little bit stronger than Bitcoin today. ETH got bought up before it got down to that weekly VWAP, where Bitcoin actually went down and touched it.
Put restrictive monetary policy on in order to get inflation back down. So, frankly, the need is one of getting rates back up to more neutral levels as quickly as we practicably can, and then moving beyond that if that turns out to be appropriate. And as you can see, it is appropriate in the sense to people's SEPs. They do write down levels of interest rates that are above their estimate of the longer run neutral rate. And there's also a range of estimates too, as you will see if you look at the details of the SEP. But thanks for your question.
Okay. Thank you all. Thanks, Mr. Chair.
Thank you.
That wraps up the news conference with Chairman Powell from.
Well, there's that. So, whew. What a move, right? Right to that G high, people sell it again. Remember that G period was when the liquidation happened, right? They brought the market up, they started that liquidation, liquidated down, back to where the buyers were at. Buyers said, I'll take it again from down here. Brought it back up. So as we get up here, you know, if you're looking to get long, a little bit late, but what you want to see is you're going to need to see some decent volume start to come in up here. ETH gassing for the ES to follow. Because this morning when we popped up here, remember it was really news driven. Powell's over now, so now the novelty. I mean, he said some pretty, bullish things where he was saying that he's gonna use his tools if necessary. That they plan on, a 2.4% growth. That inflation will be basically down to 2% next year. These are the tentative goals here. But we do have to remember that we are in a downtrend, right? And until we break that downtrend, we don't want to start buying tops. It's going to be a recipe for disaster. And the next one would be next. Basically, Powell said that they're going to raise rates at every single meeting. So we've got to watch what's going on with the rest of the economy. And then the war and everything like that could really put an effect on it. Starting to get pretty thin again here, guys. All right, well, today is my son's diabetes anniversary, and we're going to take some cookies to the school. So I think we'll just wrap it up right here. Pal's pretty much done. Look for the trade view tonight. I'm going to dig in, so it might come out a little bit later tonight, but I'm going to be digging into some opportunity that we might see. Appreciate everyone hanging out, and we'll be back a little bit later. How did everybody do today? Or how did everybody feel today? How you did is not really important. How do you feel about your trading?
What's good, Brad? I just got here. I had to
Oh,
run
there you are.
fast.
I was actually talking about you earlier because I was talking about the Mark 19. You ever shoot the Mark 19?
Grenade launcher, automatic.
Yeah.
Yeah,
I figured you did. Yeah.
I love it.
Yeah.
That thing's a beast, man. We had it hooked up to one of our Humvees, and then we
yeah.
had a 50 cal on the other one. When we finally got Humvees.
That's what I figured too. That's what I was saying earlier. I was looking for you because I was talking about the automatic grenade launcher when Biden was saying he's
I took a drive to Connecticut. I ordered a 3080 Ti graphics card from Best Buy. I got in. I don't know why. Something told me to like check Best Buy, and they had them in stock, and I ordered it. And I'm building a super high speed liquid cooled computer. I have one already. I'm building one for my girl.
Nice.
So I can have 2 setups running. I don't know. I'm crazy like that.
I don't know. I kind of look at this. I'm looking at this as, I mean, really acceptance, right? A test back of those lower prices. I mean, that's a lot of single prints on the low, but I would still consider this. I know a lot of times it has to happen in the last half hour, but I'm gonna be treating this as a spike for sure. In Globex, I kind of expect some selling. I think we're gonna see a lot of people get trapped, maybe a little pop in Globex and then a sell off. And we'll see how it continues on into the. Remember that Friday is that quad witching, so we've got all those options expiring. So we still have some expected volatility going into Friday. Of course, the fear is a little bit less with the VIX being down at 26. I think a lot of people thought because of Powell and the way he is that he was going to say a lot more bearish or hawkish things. He really didn't. He was very, very neutral, really walked a tight line. The market responded really well to it. And, we kind of rallied back up to the value, right? But yeah, other than that, I'm gonna head out, go eat some cookies, enjoy the rest of the day. Looks like my dad did pretty well. 237 on the MES, 2 on the EM. Nice. I didn't do too hot on this. I did pretty decent today. 262.
All right, Brad, man, be easy. Same time tomorrow.
Oh yeah, 8:30 tomorrow. Actually, tomorrow I'll probably be on early and I'll open up the Zoom. I'll just post the Zoom in the. I mean, it's the same link every single day. So if you guys want to jump on, it'll just probably say waiting for host to start or whatever. But I'll post it when I actually log in, so that way, you guys will have a. Yeah.
All right, man. Have a good one. Thank you.
All right. See you later, bro. No trades for you, Double R?